watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, I'll be taking up all your stock-related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show, I'm being joined by Sarvendra Srivastav on our technicals, and our fundamental guest will be joining us very shortly. Welcome to the show, Sarvendra.
Very good evening, Himakshi.
Good evening. Now, first, let's just get started with the show. First query we have of Shilchar from Andhra Pradesh. He holds 148 shares of Belrise Industries, and he bought it at 121.35 rupees. So, he hasn't mentioned the time horizon, so I'd like to take your perspective, on Belrise Industries. Firstly, how is it looking on the charts? And secondly, if somebody wants to, stay put with this investment of his for a longer period of time, so what would your advice be?
See, I think for a technician, the data part is very little here. I think whatever I can see is it looks like a very recent listing. And data is from May onwards, which I can see right now. Within that setup, I think within the short term, I think the trend is up. So short-term trend is up. That much I can comment. And I see good supports in the region of around 125, 130. So as long as those numbers are being held, I think he should be staying put in that trade. So around 125 or slightly lower than that, he can keep a trailing stop loss and stay put in that position.
So stay put with your investment, that's the word coming in by our experts there. Another query we have is from Moturu from Andhra Pradesh, and it's a WhatsApp query. He has a corpus of 1 lakh rupees. He has bought 1 lakh shares of Suzlon at 31 apiece, and he has made some significant profits of 29 lakh rupees there. So kudos to you, Mr. Moturu, if you're watching us right now. And so Sarvendra, although he's looking for a 1-year outlook on the counter, but still for somebody who has made such significant profits, what would your advice be?
See, first and foremost, congratulations to him for getting this good trade. But I think still he's running slightly late here, because I think if he's bought those rates, what he's saying, I think he's also seen the high of around 80, 83. So from there, it's already a more than 20% correction. So whatever profit he has, I think he would have been making at least 20% more of that. I would suggest that he books some part profits here, and remaining positions for him then become free. So that would be my suggestion for him. But since he's in such great profits, I think I will leave it up to him. But if he asks me, I think if he books 50% around 60, 65, then his remaining 50,000 shares, they become free for life. And if he likes the company, then he can just keep holding that till perpetuity, or as long as the trend is there and the markets are moving, I think he'll keep on making more money there without any additional risk. And with that money, he can allocate somewhere else, because looks like that he has kept all his eggs in one basket. So that's not a good strategy as far as I'm concerned. So try and spread it out. You've got good profits. Try take out that capital and look at and try and find something again like Suzlon for himself. Yeah.
Okay. So partially book your profits, and you can also, not put all your eggs in just one basket. So that's the very, wise advice coming there. With that, we have our first caller on the show joining us on the phone line from Hyderabad. Hi, Dheeraj. Good evening.
Good evening, ma'am.
Yes, how can I help you?
Ma'am, my query is regarding Sula Vineyards, ma'am.
Okay.
The stock corrected from almost 500 rupees to almost 250, 245.
Yes.
242 is the all-time low, ma'am.
Yeah.
So today there is a news that Sula is entering into premium Scotch whiskey and other spirits, premium spirits.
Yeah.
So the stock zoomed a bit.
Yeah.
So I have purchased 650 shares at 268 rupees, ma'am.
Okay.
I would like to know both short-term and long-term outlook, ma'am. As the stocks have corrected, there is limited downside, which I have seen, and I have entered the stock, ma'am.
Yeah.
Could I see the levels of 300 in the coming 2 to 3 months if their work got speed up?
Okay. So
I'd like to know both long-term and short-term view, ma'am.
Yes,
If
yes,
the long-term
absolutely.
look is positive, I'd like to hold it for more than 1 year, ma'am.
Absolutely. So since Sarvendra, our fundamental guest, hasn't joined us yet, so I'd like you only to give us a fundamental outlook as well on the counter. And there are reports that Sula is in talks to acquire 2 to 3 small brands to enter whiskey, scotch, and also the vodka segment. So considering all the reports that are coming in, and the stock, if we talk about just today, was up in trade today, nearly 2.5% there. So what's your sense? Are you positive on the company, and fundamentally, how are you viewing it? Technically, how are you viewing it?
See, on the fundamental side, I can only tell him a little bit, not much, in the sense that I would look at it as a life low. So the stock is already at its life low, historical lows, right? So its life historical lows, the stock has kind of made a double bottom, if I may say. Still, the candle is not closed for the month, but we can say that you are at your lifetime lows right now. So from the time it has traded, so hardly around I think 2.5-3 years of data is here. So since you're already at low, you've not started anything. For a technical analyst, there's no marker from where you can say that a bull market has started. Right now, you're just in a long dated kind of correction right from the time that you got listed. You had a small move up there, but largely you've been down. And as you rightly pointed out, you've already retraced. You've already fallen more than around 50% on the stock. So I think the repair process will take time. I can tell him definitely the green shoots are here, possibly because if we have to hold these levels, I think on monthly closing basis, first thing that I want to see here is that I need to hold 240, 250. That area I need to hold anyhow for a good fight back by bulls. So the first filter, still 10 days left in this month. First thing that you should look at is that you don't need to close below 240. If you did that, then you have done some good work this month, is what I can tell. And then from next month onwards, we can start looking at it. Is it starting to recover or not? But 250 for me will be sacrosanct. 240, mind you, and 240 levels is what he should be watching here. And fundamentally, I can tell him that limited data here. So you like the brands, you may like the company, but right now, I think within the short to medium term, the trend is down. And long term, as I said, it's life lows. So there's no reversal as of yet to call anything big. But yes, with a double bottom in place, if this month, hopefully, you can look for a fight back by bulls.
Okay. Thank you so much, Sarvendra, for that. And now let's go across to Snigdha joining us on the phone line from Hyderabad. Hi, Snigdha. Good evening.
Hi, good evening. So my query is regarding Garden Reach.
Okay.
I have 50 shares at 2575.
Yeah.
So I would like to know the short term.
For how long?
So for 1 month, for the next 1 month.
All right. So probably a trading
and also,
perspective.
can you please help me? So I have 2 lakhs of corpus, and I just want a few trading ideas.
Okay, so Snigdha, I'm afraid that we cater to one query at a time. So right now I'll just stick to Garden Reach, and you can call us again and get your second query answered there. But Sarvendra, coming to you, a trading perspective on Garden Reach, the stock has fallen from the levels that Snigdha has bought in. And so are you, and also if I look at the charts, the stock is moving in a downward trend. So is it going to tank further in the next 1 month?
See, already 3 months of decline. I think from the high, we're already into the 3rd month. So within that, as I said, since she's only looking at a 1 month kind of a view here, I think we had a fairly decent multi-week correction, which is already over. So and so the filter to look at right now would be the low at 24.23. So I would say as long as that low at 24.23 is being held, I would say that possibly a short-term bottom is already in place. It's a buy on dip kind of a stock, as long as I said you hold that 24.20 kind of number. And within a 1 month, I think bounces can take you back towards, if I may call, around 27.50. So I think within the short term, a decent risk reward is emerging. You try and buy more close to 25.20, so that you have a 100-point kind of a downside and you have a 250-point kind of upside. So that would make a lot of sense in terms of the short-term risk reward. So wait for a small dip, and then possibly you can look at it to reach 27.50 levels.
Okay. Thank you so much for that. Now we are being joined by Man Singh from Kurnool on the phone line. Hi Man Singh, good evening.
Hi Himakshi, good evening.
Yes, how can I help you today, Man Singh?
I have 1 lakh corpus. I wish to invest in E2E network.
Okay.
What are the entry levels? How is the future prospects? I can invest 2 to 3 years, up to 5 years.
Understood. So, Sarvendra, E2E network, if we talk about just today, so it was up in trade today nearly 7%. So, do you really think that the current levels of 2306 are the correct levels for somebody who wants to take fresh positions in the company? And also, if we look at the valuations also, it's trading at 133. So, these are pretty high valuations, pretty stretched. So, what's your sense? Is it a good time to enter E2E network?
No, I think you already answered that in the sense that 133 PE is definitely not comforting, and the way the stock has moved, it was languishing for many years, right from 2018 onwards. It used to languish, and suddenly over the last 2-3 years, it has given you like it's given fantastic returns. So this kind of multi-bagger returns usually take time to digest, and I think we rallied all the way from 150 to 4,500 or more, which I can see right now. I think, upwards of 4,500. So I think within that space, I think you are still correcting. To me, still remains a slightly risky bet. I would tell him to avoid it and try and go to the bigger, larger names. And I typically, if you ask me and if he wants to do some fresh allocation, I would typically not look at anything which is beyond Nifty 200. So Nifty 200 max, Nifty 500 is what you should be looking at when you are building a portfolio.
Okay, so Nifty 200, maximum Nifty 500 is what you should be looking at if you have to take fresh positions. And with that, we're being joined by our fundamental guest, Mr. G. Chokalingam, founder and MD, Economics Research. Welcome to the show, Mr. Chokalingam.
Yeah, good evening.
Good evening. Mr. Chokalingam, we were discussing about E2E network because, our caller, Man Singh, I'll just give you a brief of it. So he has a corpus of 1 lakh rupees and he is interested to, invest in this counter for long term. But Sarvendra has suggested that, he should be staying away from this because the stock has already rallied. But still, what's your sense fundamentally? How are you viewing E2E network?
In fact, recently only I have studied comprehensively the stock. Despite falling by about 62%, the stock valuation is still stretched and margin has been going down. The only greatest positive thing about this company is that L&T has taken a stake. But otherwise, it's really giving a lot of, fear in terms of the kind of valuation and falling margin, because basically it buys services, adds value to and sell. And if you look at their employee cost also as a percentage of sales, it's very low. So my fear is that even if the company is great and management is of high quality of governance, the problem in the Indian market is that whenever they added value by buying services outside and selling it, and margin is very high, there seems to be a lot of competition emerging subsequently and it kills the margin. Perhaps that is the reason this company is seeing deceleration in margin in a big way. I would sell the stock at this price.
Okay. Thank you so much, Mr. Chokalingam, for that view. Now we're being joined by Mr. Murli on the phone line from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, ma'am. Thank you for taking my query.
Yes, please go ahead with the query.
My regards to Mr. Chokalingam, fundamental analyst whom I follow closely.
Yes. Please, Mr. Murli.
I bought one company called Shilchar Technologies.
Yeah.
It's a BSE listed company, the firm of transformers and others, electrical industry. At the rate of 2,000, I bought at the rate of 5,280. Now it is quoting at 4,830. I'm incurring a loss of 60,000. I bought it based on the premise. It has given an excellent result Q to Q. Even after 1:1 bonus, it has given a 70% growth in profit. And it has a high ROE and good book value and electrical industry. I'm willing to hold for long term. I'm not sure whether Mr. Chokalingam is tracking this and I need his advice.
Okay, okay. So, Mr. Chokalingam, directing this question to you, Shilchar Tech is the counter. Are you having any sort of coverage on it, and what's your sense from a fundamental point of view?
Yeah, he is right. Last 2 years, the growth has been phenomenal, but it is reflected in the price. It's trading at around 33 PE. I would suggest hold it. Definitely, anywhere from 10 to 15% return from current price is possible. And then I believe, it should be a sell purely based on the valuation.
Okay, okay. Thank you so much for that. Now, let's go across to Ram, who is joining us on the phone line from Hyderabad. Hi, Ram. Good evening.
Madam, good evening, madam.
Yes, how can I help you, Ram?
Madam, yeah, I follow Chokalingam and Fervency also. I respect them very much. Madam, I would like to know about the Lloyd Enterprises. Recently, it is buzzing and heavy volumes are taking place.
Yeah.
I would like to purchase. Actually, it has fallen from 96 to 70 rupees around now.
Yeah.
And the results are quarterly good. I would like to know both experts' analyst opinion whether I go for it. I would like to purchase 5,000 shares.
Okay.
Can I go for it, please?
Okay, okay. So, Mr. Chokalingam, Ram is having a corpus of 7 lakh rupees that he wishes to invest in Lloyd, Enterprises, and currently it's trading at 76 rupees. So, how are you viewing it from a long-term investment purpose? Are you optimistic on the counter?
Not really, because if you look at the P and EV to EBITDA, it is really exorbitant. Time like this, when there is a ongoing trade war against India by US, and the market is slightly a little nervous about it. I would not be comfortable in buying small and mid cap at such a enriched valuation. Rather, I would buy L&T. Yes, that is not my style of recommending, but I found it a very phenomenal stock. There is a lot of opportunity from L&T in terms of unlocking value from businesses like realty, defense, data center, so on. So many things are there. I mean, massive expansion. That would be a better bet than Lloyds Enterprises.
Understood, understood. Thank you so much for that view, Mr. Chokalingam. Now, let's go across to Sanjay, who's joining us on the phone line from Bengaluru. Hi, Sanjay. Good evening.
Hi, ma'am. Good evening, ma'am.
Yeah, please go ahead with the query.
Ma'am, KPI Green Energy 800 quantity in average price 600 rupees in profit in loss 60,000, ma'am. Sell the road, ma'am. Please technical analysis. Short of 3 months, ma'am.
Understood. So 3 months trading perspective on KPI Green. Sarvendra, coming directly to you. Are you optimistic on the counter, and are you seeing any sort of positive momentum there on the charts, any sort of rebounds that you are witnessing, because he is sitting on a significant loss of 63,000 there?
I think this position possibly has ended into a trading position. He might have bought it for trading, but ended up holding this. I can see clear signatures of that here. My whole thought here is that this is not if he wanted to trade, this is not a trading stock. The kind of liquidity and the kind of volumes that it trades, I think this definitely is not a trading stock. And I think he's got this negative surprise in this big correction which has come. My sense would be that since he's already in the trade, very difficult for him, for me to tell him to exit at these levels. But I think on bounce backs near to his cost, I think he should be exiting this stock for the time being, because I think clearly a distribution setup here at 550, 560. I think that is clearly visible here. So my sense would be near to your, in a pullback, as near to your cost price you can exit. I think you should be exiting this one.
Okay, thank you so much, Sarvendra, for that. Now we have Prasad on the phone line from Bengaluru. Hi, Prasad. Good evening.
Hi, good evening.
Yeah.
I would like to know if they have any views on Mamta Machinery. It was listed last year. I have around 82 shares, bought at a price of 472.
Okay.
Getting at a loss of 4,400 something.
Yes.
I'd like to know their short view. If they're not covering, I'd like to know their view on Tilak Nagar Industries.
Okay, Prasad, I'm afraid that I'll be able to take only one query at a time, so I'll stick to Mamta Machinery for the moment. Sarvendra, coming to you on the short-term outlook on Mamta Machinery, are you seeing, because he bought it at 472, currently it has fallen to 421. So are you seeing any sort of bounce back since the stock is consolidating? Do you see it reaching those levels anytime soon?
See, I'm afraid only short term can be done here. Hardly 5 6 months of data here, and the only silver lining I can see is that around that 400 mark, I think it took support within that March April quarter, within that March quarter, and then also the start of the year. So I say last year March and this year April, I think 400 has been good important support for this. So I can tell him that till 390 400 being held, I think he has got a potential for a pullback back towards 460, 470. I think that is what I can guide him in the short term. Supports at 390, 400 and possible targets at around 460, 470.
Okay, thank you so much, Sarvendra, for that. Now I am being joined by Siddharth from Guntur on the phone line. Hi, Siddharth. Good evening.
Hi, Himakti. Good evening.
Yes, how can I help you today?
I have corpus of 1 lakh rupees.
Okay.
So I want a stock suggestion from Chokalingam sir. Is it the right time to invest in Gravita India, or should I park somewhere in this current market situation? What are the safe and growth stocks?
Okay.
So
okay.
Last time sir suggested Nesco. It gave good results, sir. So I wish to same type of stock from Chokalingam sir.
Understood. So Mr. Chokalingam, you've made a lot of fans out there. So, currently we're talking about Gravita India. So what's your sense, what's your outlook on it from a longer term perspective? Because if I look at the valuation as well, so it's pretty decent as compared to its peers. And currently it's trading at 1725. So are these the decent levels for somebody who wants to invest in it?
Yeah, it's actually a unique player in the metal, quite a unique player, listed space. It basically, recycles the old metals and sell it. Now, most primary producers themselves are trading at a 12 to 15 PE, whereas this is trading at around 37 PE, even after massive fall. So, unfortunately, I would give a strong sell, but the problem is it is also gets attraction in terms of the perception. Once in a while, it booms for no reason. So I would suggest that hold it. If you are lucky to get any opportunity to sell on a rise, one should sell, but I would not suggest buying even at this level. I thank him for the kind words. I would suggest look at stocks like East India Hotel. I personally do not hold, but I think it's a great deep value stock. The kind of expansion the company is doing and kind of shareholding the company has, I believe it is one of the very very deep value stock, and industry tailwinds are also there. So that could be a very good deep value stock.
Understood. Thank you so much, Mr. Chokalingam there. Now let's go across to another query. So Pooja has written to us from Pune and she's asking whether it's the right time to invest in Nazara Tech. So Mr. Chokalingam, firstly I'd come to you on the fundamentals of it, especially since this online gaming bill has also been passed, and we are viewing Nazara Tech stock very closely there. So what's your sense fundamentally for somebody who wants to invest in it? Is it the right time?
See, very tough call, when things are so uncertain about the industry in terms of regulation. I do not know why the retail investors should consider. I mean, there are more than 4,500 stocks listed, and there are a few hundreds of stocks very attractive because this is high risk, maybe small return. High risk because 1/3 of the business is exposed to the gaming solution, which is targeted largely at the Indian market. That would be very negative. And even otherwise, it is already trading at a very rich valuation. If there is regulatory changes which are not as expected as so bad, then this can give. But otherwise, from current level also, it can fall quite badly. So therefore, I would not recommend this kind of stock at this juncture. Rather, I would, even if I'm holding, I would sell the stock.
Okay. And very quickly, I'd like to take Sarvendra's view also on the same, because since the stock has tanked very sharply today on the back of this, online gaming news. Sarvendra, what are you picking up from the charts, and what's your view? Okay, Sarvendra, I think you should unmute yourself.
I think I will, as I said, I will avoid it just like oil to water. Totally an avoid.
Okay, so a total avoid on Nazara Tech. That's the word coming in by our experts there. We have Sumant now joining us on the phone line from Hyderabad. Hi, Sumant. Good evening.
Hey, hi. Good evening.
Yes.
Yeah, I'm Sumant from Hyderabad.
Yeah.
So my query is about Mercury EV Tech.
Okay.
It's a small EV player.
Yeah.
So I invested at 45 rupees for 2,500 quantity. So stock has been, tremendous results from the last 3 quarters.
Yeah.
So it has been corrected from more than 142 to 45 rupees.
Yes.
But today it has been rallied more than 15%. I can able to hold for next 1 year, 2 years.
Okay.
I want to know the perspectives and business fundamentals of the company.
Okay. So, Mr. Chokalingam, I'll come to you quickly on this. Mercury EV is the counter. Are you bullish on the company from a long-term investment purpose?
No, certainly not. It's a very too small company in terms of business, if you see, and valuation also extraordinarily stretched. So it is a very high risky investment. So investors should decide whether he should be staying in such a high risk stock, because valuation also very high. If you see the June quarter, it's just a 10 paisa EPS. So I won't give any firm view, because this kind of small companies can run up even without any fundamental basis. So I can only say that it is too risky stock. Investors should decide whether they should be in such a risky investments.
Absolutely. Thank you so much, Mr. Chokalingam, for that wise advice there. And with that, I'm afraid that I'm running short of time. But thank you so much once again, Mr. Chokalingam and Sarvendra, for always being there and solving all our viewers' queries so patiently. And with that, viewers, it's a wrap on this edition of Ask Profit. But please don't go anywhere, as there's so much lined up ahead on the other side of the break.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest.
External Affairs Minister S. Jaishankar begins his 3-day visit to Russia for crucial trade talks amid the tensions between India and the US. He's also set to address the India-Russia Business Forum meeting in Moscow.
समाज के कल्याण को और समाज में जो बहुत एक बड़ी बुराई आ रही है उससे बचने के लिए ये बिल लाया गया। माननीय अध्यक्ष जी, मैं रिक्वेस्ट करूंगा इस हाउस से इसको यूनानिमसली पास करें।
Sabha passes the online gaming bill. IT Minister Ashwini Vaishnav says the government prioritizes society's interest over potential revenue losses due to the bill. Finance Minister's meeting with the group of ministers is underway. The GOM on insurance proposes exemption of health and life insurance premium for individuals from GST, says Bihar Deputy Chief Minister Samrat Chaudhary. The market ends higher as Nifty posts the longest winning streak in over 2 months to close above the 25,000 mark. Sectoral indices closed mixed as IT posts the most amount of gains led by Infosys and Coforge. Nifty Bank snaps its 4-day gaining streak. Vedanta clarifies that SEBI's cautionary letter is for a procedural lapse and has no financial or operational restrictions after the NCLT Mumbai defers its demerger hearing on SEBI and government's objections. CCPA imposes 10 lakh rupee fine on Rapido for misleading advertisements that guarantee an auto rickshaw in 5 minutes or 50 rupees of cashback. CCPA directs Rapido to continue them with immediate effect. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's take you through our top focus this evening. Senior Russian diplomat Roman Babushkin has said that President Putin's visit to the US last week ensured no additional tariffs will be imposed on India. Underscoring the strength of India-Russia relationship, he also added that the partnership will continue to thrive despite external pressures. Let's listen in.
The positive outcomes of the Russian President Putin visit to the US last week, after that, President Trump, as far as according to the reports, decided not to impose additional tariffs on India. But whatever happens, if whatever are the disruptions globally, so we are very much capable to resolve them for the mutual satisfaction with India, and we will just continue our partnership as we do, despite any external threats.
My colleague from NDTV, Ghazali, also spoke to Roman Babushkin after the press conference and asked him about his take on US threats of secondary tariffs on India for continuing to buy Russian oil.
This is not only unjustified, it's unlawful. So this is a tool of unlawful competition that is leading to the disruption of trade, to distrust in the international markets, and ultimately lead to instability when it comes to energy market, to the global economy generally. So especially taking into account that Russia is the largest oil producer and India is the largest oil consumer, it is natural to see how our countries do cooperate, and actually that cooperation proved itself as mutually beneficial and very important for the people. To ensure energy security of India, for which Russia becomes a major player. We don't believe that, given these circumstances into account, we don't believe that any kind of attempts to disrupt these relations, to disrupt this cooperation, would have a serious long-term impact on us, because we will always find a way how to overcome that and to adjust ourselves to new reality.
And at the same conference, EV Griva, Russia's deputy trade representative in India, revealed that New Delhi is receiving a significant discount on Russian oil. He added that annual trade between India and Russia is expected to grow by around 10%.
The discount, see, it's a commercial secret, I think, because it's usually just dialogue between businessmen, and approximately usually 5% discount.
And I also have David Roche, strategist at Quantum Strategy, now joining us. Good evening, David, and welcome to NDTV Profit. Thanks so much for your time. We're seeing Russia expecting bilateral trade to grow at around 10% annually. What sectors are you seeing beyond oil as the key drivers of this very expanding trade relationship?
Well, first of all, let's get some perspective into this. India imports $64 billion worth of oil from Russia and exports between $4 and $5 billion worth of goods to Russia, which are primarily quite low value-added goods, including foodstuffs and so on. If there was to come a major impediment to India continuing to import that oil, and a lot of tariffs put as punishment for importing that oil on India's exports to the United States, then there is really no way in which the Russians can provide a market for India for the goods that will have been shut out of the United States, for example. That's a myth. That is not saying that is right or wrong. I'm saying that would happen. And the question really is, will that happen or will that not happen? But to see Russia as an alternative market for Indian goods is just not realistic.
All right. What would you say are the broader geopolitical and economic implications for India if the US moves forward with the sanctions related to Russian oil imports?
Well, first of all, most of this is conditioned by what President Trump feels about Putin. At the moment, Putin is really dominating President Trump's thinking about Ukraine and everything else. And if President Trump continues to go softly on Putin, if he continues to give him space to drag out the war in Ukraine and pretend to negotiate peace while pursuing war, then Trump will not look to increase the friction around Russian oil. And there will, in effect, I would say, in time, the extra tariffs put on India because of its importing and use of Russian oil, they would be taken off. But if, on the other hand, Trump adheres to the new entente, which came out of the discussions in Washington with the Europeans on the 28th, if he sticks to that and Putin continues to ignore it and to work against it, then Trump could very quickly flip and become very hostile to Putin. And then you would see more tariffs put on India and more tariffs put on China. That's basically how I see it. It's a binary situation which is very unstable because the degree of influence which Putin has over President Trump is not stable either.
And actually, but we've seen Russia actually be a bit reassuring, because I'm going to play out that reaction from diplomat Roman Babushkin that also reassured India that Russia is always open to trade with India and saying that India must not be worrying about the US threats. Let's play that out first.
If the Indian goods are facing difficulties entering the US market, the Russian market would welcome Indian imports to the most extent possible.
David, I'm going to ask you the question that probably every Indian audience and investor is thinking of when they're watching this. From a market strategist perspective, how might these dynamics that you just spoke of, that are very volatile in nature, how are they going to affect India's foreign investment climate and currency stability in the near term?
Look, I think India is a story which stands in its own right. I think Trump is making a huge mistake, and India is standing up to Trump. And that is rare, and I think it is to India's advantage. Will it end the Indian investment story? No. Why? Because exports to the United States for India are approximately 3% of GDP, and over half of that are services, which aren't going to be in Trump's crosshairs. So I would relax about that. What I would absolutely get out of your mind is any idea that Russia is going to provide a realistic growth market for India. Russia is a growth market only for China, which is selling its cars to pay for its oil. India doesn't have that choice, and frankly, it's not extra exports of food from India which is going to make the difference.
Right. David Roche, thanks so much as always for keeping it sharp and straightforward. Appreciate you spending some time with us and sharing your insight. And moving on, the Parliamentary Standing Committee on Transport, Tourism and Culture presented its 380th report on overall review of safety of the civil aviation sector. This was presented in the Rajya Sabha and the Lok Sabha today. The committee's report identifies 12 key areas that require systemic improvement to ensure the safety and growth of India's civil aviation sector. My colleague Tanushka Datta joins us with more on this.
Right, so what we do understand at this point from this Parliamentary Standing Committee report is the recommendations that have been made by them. First off, being grant the DGCA full administrative and financial autonomy to address staff shortages across board. The second being mitigate air traffic control fatigue and staff shortages. We do know there's been much debate over the fatigue and the mental health conditions of the ATCOs working there. So this also addresses the fatigue that is, faced by them in their way of work. Then being strengthening surveillance and enforcement with financial penalties in the sense to standardize safety protocols. And this applies not just for airlines but also for helicopter operations. Another important thing that, the recommendation in this report makes is to mandate root cause analysis for recurring risks like runway incursions. So, to come about with a more comprehensive way of going about these sort of risks and how to avert them. Then another important thing that is mentioned is to establish a just culture. By just culture, what the committee means is to establish a sort of an environment where just and fair investigation of any sort of accidents or problems can come about, and whistleblower protection as well. Now, the report also recommends to develop domestic MRO capabilities to reduce foreign dependence, and among others, there is also infrastructure emphasis and also pilot reorganization, fleet expansion, and to create a dedicated member at the ATC post, at the air traffic control post on the AIB board. And to strengthen human factors as well. So this sort of, holistically recommends AI also to be brought in to implement such time-bound mechanisms to close all safety deficiencies across the board. And this parliamentary committee report, comes in from the MP Sanjay Kumar Jha, and of course it was tabled today as a 388th report on the overall review of safety in the civil aviation sector. We do know that the aviation sector in our country is currently facing and going through a churning at this point. So this report is key at this point.
Right, Tanushka, thanks so much for that. This is as the parliamentary panel has reviewed aviation safety and submitted this report. Moving on to another crucial update from this evening, the group of ministers constituted by the GST Council has proposed that individuals must be exempt from GST on life and health insurance. Speaking to media persons after a meeting today, Bihar Finance Minister Samrat Chaudhary said this would be referred to the GST Council. Now remember, he is also the head of the group of ministers.
हेल्थ इंश्योरेंस पे सब लोगों में सबकी इच्छा रही कि इसको पास किया जाए और गवर्नमेंट ऑफ इंडिया का प्रस्ताव स्पष्ट है कि सभी जो आदरणीय प्रधानमंत्री जी ने लाल किले से कहा है कि इंश्योरेंस के सेक्टर में इंडिविजुअल या उनके परिवार के इंश्योरेंस को हेल्थ इंश्योरेंस को फ्री एक तरह से जीएसटी से मुक्त किया जाए। उस पर चर्चा हुई है सबका और इसका रिपोर्ट लेकर GST Council को मैं दूंगा।
Meanwhile, this has been a contentious issue for quite some time, if you remember. But for more details on this, our Delhi Bureau Chief Shrimi Chaudhary joining us.
So what he's indicating at that the GOM in its two-day crucial meeting, they converged together, ministers today in the capital, and in fact the first in the agenda was the insurance, the tax treatment on the insurance policies for both life and health insurance, and what they discussed and deliberated upon in the line of centre proposal to scrap 18% on both life and health insurance premium, and in fact some of the states states actually expressed concern during the meeting, and they were like that it could lead to some revenue loss is what their anticipation is. But what we are also getting sense that most of the states are in the favor of exempting life and health insurance, because it will bring a huge tax relief for common man, and that is what has been discussed today. But what we are also getting sense that the final report will go to the GST Council as and when they meet, and they will perhaps take a call on that. But meanwhile, the minister also discussed on another important issue on the compensation cess, of course the future of compensation cess, where the regime is nearing to an end, and in fact government is expected to repay the debt before a quarter, and in fact they are working on and chalking out plan on the future of compensation, said that what gonna happen once the cess replace, and whether there will be any additional levy coming over and above the 40% on the special rate which is coming and which is proposed by the centre. So tomorrow will be another crucial day, because all the minister is coming together again, the rate rationalization, where they are going to discuss which item will go to 5% and which will go to the 18%. Remember, the centre proposing moving to 2 slab structure from the existing 4 tier structure. So the final recommendation will, of course, these GOM will send to the council, and we will see some decision coming in the next council meeting.
Thanks, Shrimi, for that. And speaking to the media while coming out of this same meeting, we also heard from Gajendra Singh Khimsar, Rajasthan's health minister, who stated that discussions are ongoing and will continue into day 2 of the meeting of the group of ministers.
Deliberations are on, ministers are all talking. FM got the ball rolling. और अब ये जैसे अनफोल्ड होगा, टुमारो इज द मेन।
एफएम ने प्रपोजल क्या बताया?
एफएम ने बोला कि आप सब मिनिस्टर्स बैठ के इसका डिस्कशन कर लीजिए, और कोई भी अपने एनीथिंग यू वांट टू सजेस्ट, एनी दिस थिंग, वी आर रेडी टू ओपन टू डिस्कस।
एफएम ने 2 स्लैब स्ट्रक्चर की बात करी कि हम जीएसटी को 5 और 18% पे लाना चाहते हैं।
नहीं, स्लैब्स तो कई हैं, लेकिन बट द थिंग इज एफएम जस्ट डिड द इंट्रोडक्शन टुडे, दैट्स ऑल। FM did not participate per se with directly with all the states.
किसी स्टेट को कोई
आपत्ति भी है और सराहना भी है, छोटी मोटी है। These are all teething problems.
क्या GOM on insurance ने कोई final recommendation?
We will tell you tomorrow.
And an important update in our biggest story of the day, the Lok Sabha has passed the promotion and regulation of the online gaming bill. NDTV Profit's Delhi Bureau Chief Shrimi Chaudhary spoke to the Minister of Information and Broadcasting, Ashwini Vaishnav, and he told NDTV Profit that online money gaming is negatively impacting people. For context, the bill cracks down on real money-based gaming while supporting esports and online social games. The legislation prohibits advertising or endorsements of platforms facilitating online games that involve monetary transactions.
Well, a landmark bill has been passed in the Lok Sabha today, aiming to curb, very harmful practices from the online gaming sector. And to talk about it, joining us, Union IT and Railway Minister Ashwini Vaishnav. Thank you so much, sir, talking to NDTV Profit. I'd like to start by asking you that, this bill considered as a death knell for, online gaming sector. So, is there a way to sort of make them also survive when it comes into force?
First of all, I would like to point out that this bill basically promotes 2 out of 3 sectors within the online gaming universe. Esports and online social gaming will be promoted, they will be encouraged, there will be schemes and programs to encourage that sector, which is very important part of the online gaming sector, right? These 2 segments. The discouragement is for only 1 segment out of the 3 segments, which is online money gaming. Online money gaming has been very clearly observed over the last few years that the impact on society is very significant. There are families which are losing their entire life's earnings. There are extreme cases where the people who have lost money, they commit suicides. And the significant psychological disorder which is happening because of this is very important. WHO has actually even classified it as a separate public health disease, ICD-11 they have called it. So that's a very significant thing for which society has to be protected. If you have to look at what is the interest of the entire society and what is the interest of a segment of the industry, then we have to weigh it, and the interest of society interest of the middle class families has to be paramount.
So there are a lot of...
And now that the bill has been passed in the Lok Sabha, let's go across to my colleague Himakshi to understand which companies are likely to come under government scrutiny. Himakshi, over to you.
The online gaming bill tabled in the parliament could actually significantly impact some of India's biggest gaming platforms. So right on the top is Dream 11, the country's largest fantasy sports application, which is dominating cricket and football leagues, where users build their own virtual teams. Then there's MPL, the Mobile Premier League, a major player in both esports and fantasy gaming. Now, this is backed by marquee investors like Sequoia Capital. Now, the bill could also hit Probo, which is an opinion trading app that lets the users bet on the outcomes of the real-world events. Among the card-based platforms, PokerBazi stands out, with over 50 lakh active players, while Cardbazi offers real money formats like Rummy and Teen Patti. So finally, we have Player Spot, where betting goes beyond sports, extending to predictions on politics and public events. Now together, these platforms represent India's fast-growing online money gaming sector, and this bill could actually, redraw the rules of the game.
Thanks for that, Himakshi. Moving on, the latest coming in the Vedanta demerger case. The company has clarified that SEBI's letter objecting its demerger is only cautionary in nature for a procedural lapse. This comes after the NCLT deferred the Vedanta demerger's hearing, and the next one now is expected on the 17th of September. For more details on this, let me go across to Charu. Charu, give us the latest.
So the National Company Law Tribunal has deferred the hearing on approving Vedanta Group's demerger to September 17th. Now this has come after some arguments made by the central government as well as SEBI before the tribunal regarding what objections or what concerns they may have against the demerger. So firstly, central government said that the group had not disclosed its liabilities properly to the government, and that is why arguments need to be made and considered against the said demerger, and that is why they asked for a deferment. Meanwhile, Securities and Exchange Board of India on August 13 had given an administrative warning of sorts to the compliance officer as well as the company secretary of Vedanta Group, asking them as to why a certain permission was not taken from the regulator. What had happened was that the scheme of arrangement of the demerger was changed before informing or taking prior permission from the market watchdog, because of which SEBI came out with an administrative warning where they asked the board of the group to show how they are going to be committing to the cause of not doing certain activities like this in future. Now, this is a demerger that has been delayed in a way because it was supposed to be completed in March this year, but now the extended deadline is at the end of September. It was announced first in September 2023.
Thanks for that, Charu. Moving on, India's consumer rights regulator has slapped a 10 lakh rupee fine on Rapido's parent company, Roppan Transportation, for misleading advertisements. The Central Consumer Protection Authority took suo motu action, citing deceptive promotions posted on Rapido's official platforms, including YouTube and Facebook. For more on this, let me go over to my colleague Agni. Agni, give us all the details.
Right, so Rapido's parent has been accused of misleading ads and has been fined 10 lakh rupees for the same. Now remember, the ad which are in question talked about autos in 5 minutes and guaranteed autos, so it's very hard to read terms and conditions surrounding this. So CCP has said that this is intentionally misleading, and Rapido has failed to resolve complaints which are raised by customers. Now CCPA has asked Rapido to first of all take down all of these advertisements it has asked it to give a compliance report within 15 days and pay a refund to all the aggrieved customers. Now this ad, CCPA says, has been airing in over 120 cities for 500 plus days in 120 plus cities in multiple regional languages, which is what allows the misleading ad to propagate further and lead more people into the trap. Now the CCPA has said that Rapido's conduct leaves no doubt in its mind that it has apathetic attitude towards consumer rights and consumer interests. We have reached out to Rapido for a comment. As and when it comes, we'll bring it to you.
Thanks for that, Agni. Meanwhile, let's take a look at how the markets fared today. The benchmark indices climbed throughout the day and closed near their highest levels. The Nifty and Sensex each gained about 0.3%, posting their longest winning streak in over 2 months. Strong performances by IT heavyweights like Infosys and TCS helped lift the indices. Sectoral indices ended mixed, with media declining nearly 2% and FMCG and IT leading the gains. From a broader market point of view, the mid-cap and small-cap indices outperformed the benchmarks. And moving on, the Unique Identification Authority of India has now partnered with Elon Musk's Starlink satellite communication to enable Aadhaar-based customer verification for its internet services in India. The move is meant to make the onboarding of customers faster, more secure and fully compliant with the KYC norms. And that's a wrap on this edition of the broadcast. Stay tuned to NDTV Profit for more news and updates.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
The defense sector is in focus today because of the cabinet clearance to a 62,000 crore order for combat aircrafts. But even as we track what's happening with the stocks, etc., the core story of India's defense is changing
slowly but surely. In fact, to speak on this, we have a very exclusive conversation today from someone who you may not hear from too often, Dr. B.K. Das, who's the Director General of ECS, that's the Electronics and Communication System at DRDO, is joining us on the show today. Thank you so much, Dr. Das, for speaking with us here at NDTV Profit. It's an absolute delight.
My pleasure.
Okay, let me start by just understanding what is happening right now. And I'm going to start straight with Project Sudarshan Chakra. This is something that Prime Minister spoke about in the 15th August speech. We have seen what happened with Operation Sindoor, etc. How has that now shaped the way we approach defense research? And let's start with your views on how India can build an anti-missile system.
Okay, I mean, if I look at where we are today, every nation needs to protect its sovereignty, its assets, its systems. That's the best part of the defense. And if we need to do that, the very first thing is we have to be alert. And the alert aspect comes from surveillance. So we should have certain long-range sensors to have a proper surveillance of all our areas around. And the idea in any kind of a protection is the fastest you get to know, and the time is the win. So if you know the things better and faster, you should be able to have your plans and strategies well. So India has led forward, not today, it's quite some time back we thought about our air defense program, that against any attack, what kind of a high precision systems we can make, which will be able to counterattack and protect the nation. So in this regard, our detections, our tracking, surveillance, and the missile systems we have been prepared with. So that's one aspect of air defense if you look at. But the best part of air defense is into three aspects. First comes the surveillance. The second comes the detection. The third comes the tracking. The fourth comes the identification, that whether it is a friend or a foe. And the moment you have the identification, you should plan the counterattack for neutralizations. These are the 5 layers of air defense any country has. So India in general and DRDO in particular have done quite a bit of an investment on the research in this special domain. Lots and lots of technologies are involved in all these 5 aspects which I explained to you. To start with the surveillance, detection and tracking through the radars, the long range radars, which as you are aware, India, we have got the powerhouse of radar in one lab called LRD and the industries together. So we are able to make long range radars, high precision radars, which can track multiple targets from very farther ranges. And after that, we can have a very high precision tracking, detection, identification. And apart from radar, we use certain other means like electro-optics, infrared imagery, and various other physics to identify such targets. Once we identify such targets, we need to define its identification of a friend or foe. We have got built-in artificial intelligence, our knowledge base, our hardcore software, which our engineers have developed, scientists have designed, that we are able to classify and identify this as an attack target. Not only that, we can further predict its velocity, its point of impact, and future course of action, based on which we have got the counter-attack mechanism. The counter-attack could be for a long-range missiles, which we have designed a number of them, or intermediate-range missiles based on the attack location, or it could be the electronic warfare systems wherein we do the soft killing by high-powered microwave and jamming of the signals, that is called soft kill. And finally, if it comes closer by for any reasons or if it is just short targets, then we have got the laser level directed energy weapon to counter-attack with a pinpoint attack and firing. So this is the various layered defense attacks which we have got, and of course the final level is always our attacks and the guns. So with this all multi-layer of attack, we can detect, we can identify, we can classify, we can define it either it is an attack or a friendly, based on which the neutralize. So all these technologies in various forms by our multiple laboratories of DRDO, they have worked. And the entire industry belt of Indian defense sectors, both PSUs as well as private sectors, are fully geared up. They have taken our TOTs to realize such systems. Yes. And in totality, In various bits and pieces, the models have been developed, integrated, and in various forms it has been deployed. And today, lots and lots of research is going on in this particular field, how to have very high strength algorithms, high cognition algorithms, more signal processing, intensive evaluations, and more powerful radar and missiles for precision attack.
Dr. Das, give us a sense of how much of this is indigenous, developed by Indian scientists, how much of this is contributing by the private sector, and how much of it is something that we depend on our trading partners on or with?
Okay, let me tell you. Generally, this entire concept is 100% Indian concept. We have all thought, we have all planned, and we have executed. The design of the entire system is Indian. The entire algorithm, the development, the basic hardware design, the implementations, the entire thing is done by DRDO. But however, when we do the design, we take it up to prototyping level. We test it in the lab, we test it in the field. And through the industries, Indian industries I'm specifically saying, which comes through our general process of competition. And they realize in multiple numbers such systems through their systems and our design and all the protocols and every system design being Indian, we make the systems out. But having said that, there are certain core level dependencies will always be there. I think every country needs that. We cannot have indigenizations to the grassroots level to that extent. Let us say if you talk about basic processors or FPGA, if you talk about certain chips, certain SRUs, some basic blocks are always maybe certain detectors. Some few things are there which definitely comes out. But mostly end-to-end the system is designed, developed and delivered by the Indian industries through Indian brain, through DRDO.
What is the contribution of the private sector? I mean, one big story that we've been tracking, of course, is a business channel as well, about how the private sector has really come of age in terms of India's defense capabilities. Do you see this growing? Any light that you can throw upon this, Dr. Das? And of course, I'm not probing you too much because you know what you can talk about and what you can't.
No, it's absolutely all right. I can definitely answer this. I tell you, it's an exponential growth into the private sector, that much I can tell you. Yes, there was a time we were importing, then there is a time came when the defense PSUs were the leaders because of their background, because of their infrastructures, because of their strength and depth and bandwidth, that they are able to implement the DRDO design and develop and deliver in numbers, whether it is BEL, BDL, HL, all that numbers. But today, the scenario has changed. And we're very happy to see the private sectors have come up in a big way to invest their time, money, effort in the defense productions, in the defense design, in the defense first implementation itself. If you talk about the mid-segment industries, the SMEs, and if you talk about the startups, the small-scale industries, all of them have got a desire to come into the defense. There are people who are the public investors, they are also coming in a big number when the target happens to be the defense. The entire country, 1.45 billion people, the dream has come up today, the trust has come up today that a design done by DRDO, the implementation done by industries is going to create a big revolutions in the international defense market. Now that's the precise reason even the small industries, the startups are coming out with some excellent ideas. You'll be very thrilled to know there are certain very challenging technologies which otherwise we were struggling, we were designing, we were trying to see how to implement it. Some small, young, 20, 25 years kids, they come forward to us taking those challenges, they realize those systems, and we're surprised pleasantly to see that they are going beyond our expectations, and that comes as an integrations to our main systems. So if you look at whether startups, whether MSMEs, or even the big players of private, they have all come up in a big way to work for us and develop. And of course, in a process of acquisition, as you know, we go for our process. In that process, private players are able to win in a big numbers. And today, there is a good balance of private versus public sectors. When it especially comes to electronics, to missiles, you'll be happy to know. Many of the private players have taken the TOT and DCPP of missiles. That is development cum production partnership, the concept which DRDO has built up these days, that whenever we take a new design, new project, we involve the industry at the design stage itself. That is a absolute new thinking of DRDO in last couple of years. And that has created a really revolutions in the design world in the private sectors. When under the DCPP they come forward, they are young engineers, they come and work with us, and practically there's no difference. I mean, one set of young engineers come and work with a brand of scientists, other set of young engineers get into private, third get into public. We are all engineers, we are all scientists. We have the brain to work for the country, and we have the same passion, same heartbeat to work for our nation. So that whole unity comes out in the absolute seamless way. And in our laboratories, we work together hand in gloves with different people from the private sectors, from public sectors as a team, and we design and develop together. So later on when we go for production as a part of DCPP, things becomes much faster. When they go to scale up in the number, when they are going to meet the surge capability meeting.
What are some of the companies that you are working with?
See, there are different companies. Yeah, I can tell you, if we look at some big players, Tata, L&T, Adani's, they have come in a very, very big way to invest in the defense, and they are working with us. Then the next level, if it goes to the radars and other applications, it is going to be Astra Microwave, Data Patterns, Coral, Mistral. I mean, the list is endless. If I talk about, it's in 30, 40, 50 such groups of industries are coming forward to work with us.
Absolutely, absolutely. Thank you so much, sir, for speaking with us. So that was the exclusive conversation with Dr. B.K. Das. He's the DG of Electronics and Communication System at DRDO. And 2 or 3 things that really stood out. They're working with at least 35 to 40 private companies, large, mid and small, and innovators, startups as well, to build India's technology-pushed and focused defense apparatus. So truly insightful conversation there. Thank you so much for joining in. S. Krishnan, the MeitY Secretary. Mr. Krishnan, thank you so much for speaking to us on, I think, what has been the biggest issue, and has the industry also saying that maybe this is a death knell for a 2 lakh crore business. But can you start by explaining the thinking behind this bill and what the intent is?
Thank you for having me on your show. The intent behind this bill is that the government believes that there is a large segment of gaming development, gamers, and there's an entire ecosystem there, which can potentially make India the game development capital of the world. And a number of measures have been taken to actually support that. The National Institute of Creative Technology is coming up in Mumbai. STPI, which functions under MeitY, has centers of excellence both in Hyderabad as part of T-Hub and also in the Northeast. And we are working through a number of other ways by which gaming-related development is being focused on. One of the issues which has repeatedly come up in the gaming sector has been clarity on classification. Many parts of the gaming sector believe that they are tarred by association, and there is a segment of the gaming sector which is causing distress, financial distress, social distress related to addiction and so on. One part of it is doing that, whereas another part is really positively oriented in terms of gamification, development, content development, creative development, and so on. Government's intent is very clear that the portion which relates to the positive outcomes needs to be encouraged and developed. And for that, a clear delineation has to be made between the 2 parts of the industry. And therefore, there's a clear definition which has been offered in this act of within online gaming, of esports and online social games, which include both recreational and educational games. So these 2 on the one side have been taken up for special attention, for development and further promotion. And on the other side are the online money games, which involve a number of other games which are proving to be addictive and problematic. This is a concern which has been raised in multiple parliamentary committees by people from across the political spectrum. The ministry has also been receiving a lot of these issues as elements of concern. And within the government, there's been considerable concern in this area. And many people who offer even other forms of games have actually represented to government saying that this clarity needs to be given, and there needs to be a mechanism by which the online social gaming industry, the online esports industry needs to be supported and developed. Sure. So that is the primary focus. May
I ask, sir? So a couple of things have happened. Of course, this classification is important. Although the classification between skill and luck now has been extinguished. It's about money or no money, online money gaming and other categories. What they
You see, the point here is that between skill and luck, because I think this slight gray area in the law has been used by a number of the proponents and platforms of this game to actually argue what suits them in different jurisdictions. There are no games of pure chance. Pure chance would mean that it is equivalent to a coin toss. And in a coin toss, the outcome should be 50-50. 50% of the time you win, 50% of the time you lose. That kind of thing doesn't actually come out in real life in any of these games. It's a combination of skill and luck. Skill and chance, both of them are there. They're not pure chance in all cases. There is a combination of skill and chance, and that is being used as to saying that state governments cannot legislate in this area because state governments are empowered only to regulate betting and gambling, which is an item under the state list. Now, other forms of games are part of broader trade and commerce. And in fact, in one of the cases, the Madras High Court has ruled that even if a state government wants to regulate games of skill within their boundaries, within the boundary of a state, then it is regulating trade and commerce, and that is permissible under the Constitution. The government of India has the power under List 1 of the Constitution to take up matters under item, I think it's 41 and 42, which deal with which deal with trade and commerce, interstate trade and commerce, and cross-border trade and commerce. Many of these games are offered on the basis of either interstate or cross-border trade and commerce. And therefore, I think it is legitimately within the government of India's remit to legislate on this. And the distinction of looking at between is it a game of pure chance and pure skill is something which is very difficult to decide in such cases, and it will be an endless debate. The problem is the social distress is real. People losing money, assuming or thinking that they have the skills to beat whatever is the system on the other side is a constant temptation. And this is the social distress I think the government has recognized.
Sir, Mr. Krishnan, thank you so much for speaking with us. We've understood the rationale of the bill now. Just a technical clarification required now. It has been introduced in the Parliament now. What is the chance that it is referred to a select parliamentary panel now for further scrutiny? And secondly, sir, there was no draft bill that came out prior to this online gaming bill coming out. Why is that, sir?
No, the second part of the question, I mean, a draft bill is not a requirement. It's not as if it's a matter of parliamentary procedure or legislative procedure for a draft bill to be brought out every time. I think there's been a fair amount of consultation in this area. I think different segments of the industry have been representing to the government for quite some time. We are aware of their contentions. We are aware of what they say. So to that extent, to say that the government is not aware of this area is not fair. And whatever concerns are there can certainly be reflected in the parliamentary debate, and all of that I'm sure will come out there. As far as whether it will get referred to a select committee or whether it will get discussed, I'm not the competent person to decide that. That is something which will get decided in the parliament.
Mr. Krishnan, one of the contentions that is being made by the industry is about livelihoods being lost. And I take on board everything that you've described about the social fabric and the distress that these games are creating. But I'm sure that the government has weighed the pros and cons and come to the decision that it has right now. In conversations with the industry, what is the kind of tone and tenor of the conversation that has so far taken place?
As far as the livelihoods are concerned, I think as this was being discussed internally, definitely one of the points which was clearly made was that while there are jobs, and it's not that we were not aware that there are jobs to be lost, the point which was clearly made was that the jobs to be lost would possibly be in the thousands, but the livelihoods lost is for tens of crores, in fact, hundreds of millions of people, because industry estimates themselves show that about 450 million people play various kinds of real money games or money games. So I think when you're talking about livelihoods, the concern really is about the livelihoods of those 450 million people, many of whom are poor, many of whom can ill afford it, many of whom are depriving of their families by getting addicted to these games.
So I just want to also understand, because in the past there have been situations where the top courts have been involved, and you very clearly described the game of chance versus game of skill, and the fact that there is no clarity between the two. I'm just wondering whether a legal argument will be made down the line, or will a law being framed clear the way for no challenges down the line?
See, this is a democratic country. There's rule of law. Matters can and do go to the courts for final decision. The definition that we have adopted of real money game is game of skill or game of chance or both. So we are covering all of them. And I think we believe that this is part of economic activity in the country as a trade or a commerce, and it is legitimate to define an activity in that manner. So I do not think that this is going to be an issue in terms of can you define it in this manner. We will see whether it is what happens in a court of law is something which we will have to be prepared for a legal battle if it comes up to that. I think we have a strong case to defend, and we will defend it.
Sure, and there seems to be, like you said, unity across the political spectrum on the harms of this. The one point that the industry is making, and I wanted your response to that, is that this kind of a clampdown will push those who want to indulge in these games to fly-by-night operators below the radar. Isn't it better to regulate an industry instead of effectively shutting it down? What would you say to that argument, sir?
See, I think that is something which was considered, and the approach chosen was this particular approach. Yes, always when there is something which is prohibited, there will be an enforcement challenge, but that is an administrative challenge. That is for all of us who are in positions of implementing laws to find technological and other means to actually address it. And it is always a technological challenge, and we will continue to address it. I can inform you factually that the Ministry of Electronics and Information Technology in the past few years has blocked nearly about 1,524 such illegal online games which are being offered. It's a constant exercise. It's an ongoing exercise. Whenever we come across such cases, whenever they are brought to our notice, we do block them. The Act also, the new bill which has been introduced, also has a provision to permit such blocking under Section 69A of the Information Technology Act 2000. And that is the primary provision which will be used. Also, the fact that, there is a prohibition on money being transacted through normal channels, that again will be a channel which will be used. Now, beyond this, if there are technological channels which will get used, we will have to address them through technological means.
Sir, Mr. Krishnan, Rishabh here. One question I'd like to ask is on, I'm sure the government has also taken into account the fact that this is a major GST providing sector for the government in terms of revenue as well. Given that the revenues from these platforms will shrink or completely vanish, what is the sort of outlook there in terms of making up for that shortfall?
Our estimate showed that in 2023-24, roughly about 15,000 crores was collected as GST. I do not have the 24-25 numbers with me. Now, the question is that, actually the half year from October to March, the collection was about 6,909 crores. So because after the tax was imposed, so if you sort of count it for the full year, it will roughly be about 14,000 or 15,000 crore. I think given the overall tax collection in the country, it is not that large. But I mean, setting that aside, setting the number aside, I think the question is that the government believes that you don't have to necessarily collect taxes, or you don't have to permit activities just in order to collect taxes. There are other issues which need to be tackled. There is the social distress issue which needs to be addressed, and it is not essential that we address it only on the basis of the possible tax revenue that could be there.
There are larger considerations sometime. And rightly said. Thank you so much, Mr. S. Krishnan, for speaking with us. The MeitY Secretary there answering all our questions. And this is really the big one. It's well thought out. Now, it might go through its various processes, may go to a select committee, maybe challenged in court, and those processes will continue. But in terms of the government intent, it's very, very clear that this is not something that they want to encourage. And this is specific to online money gaming, not every game that you play online. They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit.
Welcome to NDTV Profit. I'm Sanjana Chauhan and you're watching our special coverage on the online gaming bill that has now been passed in the Lok Sabha. The bill proposes a sweeping ban on all real money games. whether based on skill or chance, stopping their advertisements and blocking banks from processing related transactions. Now, the All India Gaming Federation has appealed to the Home Minister to step in, warning that a blanket ban could cripple this fast-growing industry. Their call is for regulation, not prohibition. So this evening, we're breaking down the high-stakes debate. But first, here's what Information and Broadcasting Minister Ashwini Vaishnav said exclusively to NDTV Profit Shrimi Chaudhary. This was just after the Lok Sabha passed the bill in a voice vote.
Ashwini Vaishnav, thank you so much, sir, talking to NDTV Profit. I'd like to start by asking you that, this bill considered as a death knell for, online gaming sector. So is there a way to sort of make them also survive when it comes into force?
First of all, I would like to point out that this bill basically promotes 2 out of 3 sectors within the online gaming universe. Esports and online social gaming will be promoted, they will be encouraged, there will be schemes and programs to encourage that sector, which is very important part of the online gaming sector, right? These 2 segments. The discouragement is for only 1 segment out of the 3 segments, which is online money gaming. Online money gaming has been very clearly observed over the last few years that the impact on society is very significant. There are families which are losing their entire life's earnings. There are extreme cases where the people who have lost money, they commit suicides. And the significant psychological disorder which is happening because of this is very important. WHO has actually even classified it as a separate public health disease, ICD-11 they've called it. So that's a very significant thing for which society has to be protected. If you have to look at what is the interest of the entire society and what is the interest of a segment of the industry, then we have to weigh it, and the interest of society interest of the middle class families has to be paramount.
So there are a lot of debate around, skill of game and skill of chance, but bill has not any kind of distinction there. So how are you looking at, and why so there is no distinction?
See, the question is whether money gaming, online money gaming, is it harmful for the society or not harmful for the society? That's the question which has been addressed in this bill.
So you also talked about that how the online gaming, the money gaming is leading to terror financing, money laundering, cybersecurity. What led you to think that? Is there any instances you can highlight, elaborate a bit?
There are many very clearly documented cases are there which clearly prove how online money gaming has been used for money laundering. And I of course cannot, you can always do your research and find out. It's very clearly proven. And online money gaming, I've told you very clearly that our objective is to promote the 2 segments which are useful for the society and discourage the segment which is harmful for the society.
Quickly on the part, sir, that bill outlines the fact that it will have a clear regulator, the separate regulator. Will METI is going to regulate the online gaming sector?
The authority which will be created under this bill will be basically for promotion of the 2 segments which I said. Esports, where esports will now get legal recognition. Esports is emerging as a very important part of the sports world, and by this bill it will get the legal recognition. And the second segment that we will be promoting, this authority will be promoting, is online social gaming. So it will basically be a promoting organization, encouraging organization.
Since the bill, has been passed today in Lok Sabha and it will soon get note from the Rajya Sabha as well, when could we expect the final framework on this? Is there a timeline?
Let's see.
Thank you so much.
Meanwhile, we also had an exclusive conversation with S. Krishnan, the Secretary of METI, about the rationale behind the government's plan to ban online money gaming and what the government's potential next steps could look like. Let's listen in.
There's an entire ecosystem there. which can potentially make India the game development capital of the world. And a number of measures have been taken to actually support that. The National Institute of Creative Technology is coming up in Mumbai. STPI, which functions under MeitY, has centers of excellence both in Hyderabad as part of T-Hub and also in the Northeast. And we are working through a number of other ways by which gaming-related development is being focused on. One of the issues which has repeatedly come up in the gaming sector has been clarity on classification. Many parts of the gaming sector believe that they are tarred by association, and there is a segment of the gaming sector which is causing distress, financial distress, social distress related to addiction and so on. One part of it is doing that, whereas another part is really positively oriented in terms of gamification, development, content development, creative development, and so on. Government's intent is very clear that the portion which relates to the positive outcomes needs to be encouraged and developed. And for that, a clear delineation has to be made between the two parts of the industry. And therefore, there's a clear definition which has been offered in this act of within online gaming of esports and online social games, which include both recreational and educational games.
But let's also analyze what impact this entire thing would actually have on stocks specifically. And my colleague Vansh is here with that analysis. Vansh, over to you.
Clearly, this would be there has been a blanket ban on the real money gaming for these companies, and clearly this will be negative for the companies whose revenue comes from segments like fantasy, sports, online rummy, and poker. Now, it's important to understand the distinction between the games, real money gaming, and other categories. Now, companies that focus on subscription models and in-app purchases or advertising-based revenue differ from the real money segment. So it's important to understand. And if we talk about the impact on the listed company space, let me start off with Delta Corp. Now the stock has rallied on the introduction of the new gaming bill yesterday, and we can see the follow-up gains in today's trade as well. So now this is on the back of the casino operations. Now the casino operations are not targeted under the new online gaming bill, and the casino operations account for 90% of the company's revenue for FY25. So clearly the bill's focus on formalizing the industry is positive for the particular counter, and the clamping down on the illegal online betting is also seen as a positive for this particular counter. Also, if we talk about Nazara Tech, now the company has been focused on casual, freemium and esports segment. However, they have an exposure to real money segment through PokerBaazi. The parent company Monsoon Technology is a parent of PokerBaazi, and the Monsoon Technology accounted as an associate and is not consolidated in the books of Nazara. And Nazara owns 46% stake in Moonshine Technologies. If we talk about the financials, the revenue from Moonshine stood at 192 odd crores, and the EBITDA stood at 74 odd crores for Q1 FY26. So PokerBaazi forms 35% of the sum of the parts valuation for Nazara Tech. So clearly the net effect still remains negative for this particular company. If we talk about the unlisted space, companies like Dream11, Mobile Premier League and Games 24/7, this would also take a hit as they will face hindrances in the form of the fund transfer restrictions that could choke user participation and the ad endorsements that could affect the brand spends and the marketing for these companies. Also, the industry is likely in a consolidation, and we may see smaller players exiting this industry. So this is what the overall picture is looking like for this gaming industry.
Right, thanks for that, Vansh. Meanwhile, we also spoke earlier to Nitish Mittersen of Nazara Tech, and we asked him about the company's equity investment in PokerBaazi's parent company. Let's listen in.
Nazara's revenues and EBITDA do not constitute of any real money gaming businesses, and therefore there is going to be no impact on our operating financials or going forward growth, etc., as far as our current core gaming businesses are concerned. We, of course, have invested in Moonshine, which operates PokerBaazi, which is the leading platform in that particular space. And we believe, it has been a good opportunity for us at the time of investing. This current proposed bill, as per what's come in the media, because we don't have access to the real bill, can put some, challenges to the current operating model of PokerBaazi in India if it were to play out. But the team is very strong, the technology is very strong, and we will figure out how to adapt that business going forward.
Right, Nitish, good morning. Hiral on this side. So you're saying
it could put pressure from here on. But let's understand how much has the contribution been with regards to the first quarter. A revenue of 192 crores, which is not a part of the consolidated books. Though you've mentioned that an EBITDA loss of around 74 crores is what you've seen, and this is on the back of higher marketing spends during the IPL. Now, the EBITDA loss was due to the front-loaded marketing costs. With that, how much has been the contribution to the losses in the consolidated book?
Sure. So in Q1, Nazara would have not included any revenues from Pokerbazi. It would have also not included any EBITDA profit or loss from Pokerbazi. However, the share of associates' profit and loss would come below EBITDA and translate into PAT. In this case, I believe it was around negative 20 crores or 25 crores, in that range, for Pokerbazi's contribution in our Q1 PAT numbers.
And now to add to that, if we are saying the 800 or 855 odd crores for what you've actually bought a Pokerbazi for, how do you look at treating this entire investment from here on? Will there be a change in strategy? Because the government has come out and said that, yes, this is not going to be allowed anymore. So what would that strategy be from here on?
So first of all, I'd like to see the actual bill being presented and the contents of it, to be able to, figure out what is the impact and how we are going to mitigate it. That said, it's also important to understand that Nazara's own strategy is focused on its core gaming business, which is a global business with over 80% of our revenues coming from international markets. We are a very diversified gaming platform, which is resilient to any such disruptions, whether it is due to regulation changes, taxation changes, changing consumer preferences, technology changes. There's always a lot going on in the gaming world. And over the last 2 decades, we built our business in a manner to be diversified and resilient to such challenges. So we believe our own strategy doesn't change. But of course, for Pokerbazi, depending on what's in the bill, they will have to adapt to it.
Nitish, morning. I have a two-part question and just trying to understand this better. Firstly, I wish you luck that if indeed this bill comes through in the shape or form that is being believed right now, I wish you luck with re-strategizing that tech team that you spoke so highly about onto more profitable ventures. Now, until that happens, let's assume, Nitish, that we are right now talking at a time when you know for sure that this is the eventual truth. Do you do any, and it may not impact your revenues and EBITDA numbers, as you said, but does it have a one-off impact spread over 1, 2, 3 quarters on the bottom line?
There's definitely, depending again on the outcome of all of this, right? What the bill carries and how we are able.
But I'm saying the hypothesis, Nitish, that let's assume that this is how it turns out. Yeah.
Yes, there would be. And Nazara has generally been a very conservative company. We report our financials conservatively. So if the situation demands it, we will create necessary provisions.
Is there any sense of how large could these provisionings that you would have to take, Nitish?
It's very difficult to anticipate, but the best way to think of it is, think of the entire investment as a provision.
Okay.
If the bill is very stark in terms of what online real money gaming can do in India.
Got it. The other question, Nitish, that I have for you is that because you spoke so highly of this team, right, and you would have paid a top dollar for it because of the nature of the team, what is it that you can pivot to doing? Part one. Part two, could you kind of sell it on an international jurisdiction for business to be done there?
Yeah, absolutely. The team has maybe 200 engineers, so it's extremely tech-first business, tech-first platform, which is relevant globally and not in India. Because India was a home market, the team has focused a lot on building the business over here. But this technology platform that they have is one, replicable across different geographies. Second, like you suggested, there could be licensing of this platform to other partners. There could be a potential sale, but it's all speculation. To be honest, it's very early at this point of time for us to be able to, have a clear way forward unless we know what is the impact and what is the, content of the bill.
Based on what you've said, and we've been speaking about the implications for your investment so far, but there are a lot of unlisted companies as well, and you're aware of the landscape in the real money gaming space. the point of contention seems to have been that there is no distinction that is made between skill-based and chance-based, and it's all bucketed under one. And so therefore, the stance that the government seems to be taking, and here I know that we're talking about this in hypotheticals, but what happens to the landscape here? Because ultimately there are a lot of people that are currently employed in the industry. There's a lot of investment that has taken place, money that is spent on advertisements, and so therefore, what happens to the industry in your opinion?
Well, of course, it's going to be an extremely challenging time for the industry. I would say a watershed moment for the industry if something that is speculated at this point of time were to come true. That said, I'm assuming that the government would have, looked at all aspects before taking any decision. So let us see what really happens.
Nitish, the other aspect is, what the government has come out and said is that now there is no distinguishing factor with regards to game of chance versus real money, right? There's absolutely no distinction now. So any of the other aspects or any of the other subsidiaries of Nazara that fall under this category now?
Absolutely not. So it's the only exposure we have with context to real money gaming. Money in and money out exists. Of course, what we operate is through PokerBaazi is a skill-based platform. But like you said, there is no distinction being made. Nazara, of course, has a large number of global gaming IPs, which are, growing businesses for us. And I think in any case, in the last year, a lot of our focus has been to double down on it. We've acquired some very good companies like Fusebox Games and Curve Games in the last 12 months. And we will continue down that trajectory as far as our own strategy is concerned.
Just to follow up to Neeraj's question, he had asked you whether you would likely spread this over a few quarters if you have to take a provision, or whether it'll be front-loaded. Which is it going to be, the former or the latter?
I think it's not a binary answer. We will really need to evaluate what is the impact, or what period is the impact, what is the mitigation opportunities we have in our hand. But I can assure you that whatever decision we will take will be a conservative decision.
And what led the government of India to bring in the online gaming bill in the first place? A move that effectively shuts down any game involving money. The root of this debate lies in Tamil Nadu, where online gaming companies and the state government have been locked in an intense legal battle. Let's take a step back and see how it all began.
Tamil Nadu is perhaps one of the only states that woke up early to the ills of online gaming, addiction, related mental health issues and indebtedness, and worst of all, suicides. The state told the Madras High Court that at least 47 deaths by suicide between 2019 and 2024 were linked to addiction to online games. But that list does not include a 17-year-old boy in Madurai in March this year, nor does it include a 26-year-old man in Chennai who gambled 30,000 rupees meant for his mother's cancer treatment on online rummy and then took his life. Or a 45-year-old truck driver from Namakkal who took loans worth 75 lakh, lost it all and ended his life in February. Tamil Nadu's battle with online gaming began in 2021 when it passed the Tamil Nadu Gaming and Police Laws Amendment Act. This act held all online games, including poker and rummy, as games of chance and banned them. The act was formulated after the state formed a 5-member committee headed by retired Justice K. Chandru to look into the effects of online gaming. An online gaming company, Jungli Games, dragged the government to court. In 2022, the Madras High Court said that games like poker and rummy were games of skill and not games of chance. In October 2022, Tamil Nadu passed an ordinance called the Tamil Nadu Prohibition of Online Gambling and Regulation of Online Games Ordinance, and by April 2023, this was finally passed as an act. The act, apart from including games like rummy and poker, also provided for the creation of the Tamil Nadu Online Gaming Authority, which would monitor gaming sites and raise awareness on the ills of online gaming and gambling. The All India Gaming Federation took the state to Madras High Court and won in November 2023. Tamil Nadu then knocked the doors of the Supreme Court in 2024. The government of Karnataka joined them soon after in support of a ban on online gaming. Tamil Nadu currently does not allow users to play real money games during blank hours between midnight and 5 a.m. Strict KYC norms must also be followed by the gaming companies to ensure that users are over 18 years of age. And pop-up messages must be displayed boldly, telling the user that online gaming is addictive in nature. The latest online gaming bill tabled in Parliament by the centre will be a shot in the arm for the state of Tamil Nadu in its ongoing battle.
And now let's shift focus away from online gaming to an exclusive interview. Here's a strong vote of confidence from none other than BK Das, Director General of DRDO, India's defence powerhouse. In an exclusive chat with my colleague and NDTV's Managing Editor, Tamanna Inamdar, he said that the defence sector is achieving the right balance between private and public participation. The growing number of defence exporters is also a clear sign of India's progress and strength in its defence journey. Let's listen in.
The defence sector is in focus today because of the cabinet clearance to a 62,000 crore order for combat aircrafts. But even as we track what's happening with the stocks, etc., the core story of India's defence is changing slowly but surely. In fact, to speak on this, we have a very exclusive conversation today from someone who you may not hear from too often. Dr. BK Das, who's the Director General of ECS, that's the Electronics and Communication System at DRDO, is joining us on the show today. Thank you so much, Dr. Das, for speaking with us here at NDTV Profit. It's an absolute delight.
My pleasure.
Okay, let me start by just understanding what is happening right now. And I'm going to start straight with Project Sudarshan Chakra. This is something that Prime Minister spoke about in the 15th August speech. We have seen what happened with Operation Sindoor, etc. How has that now shaped the way we approach defense research? And let's start with your views on how India can build an anti-missile system.
Okay, I mean, if I look at where we are today, every nation needs to protect its sovereignty, its assets, its systems. That's the best part of the defense. And if we need to do that, the very first thing is we have to be alert. And the alert aspect comes from surveillance. So we should have certain long-range sensors to have a proper surveillance of all our areas around. And the idea in any kind of a protection is the fastest you get to know and the time is the win. So if you know the things better and faster, you should be able to have your plans and strategies well. So India has led forward, not today, it's quite some time back we thought about our air defense program, that against any attack, what kind of a high precision systems we can make, which will be able to counterattack and protect the nation. So in this regard, our detections, our tracking, surveillance, and the missile systems we have been prepared with. So that's one aspect of air defense if you look at. But the best part of air defense is into three aspects. First comes the surveillance. The second comes the detection. The third comes the tracking. The fourth comes the identification, that whether it is a friend or a foe. And the moment you have the identification, you should plan the counterattack for neutralizations. These are the 5 layers of air defense any country has. So India in general and DRDO in particular have done quite a bit of an investment on the research in this special domain. Lots and lots of technologies are involved in all these 5 aspects which I explained to you. To start with the surveillance, detection and tracking through the radars, the long range radars, which as you are aware, India, we have got the powerhouse of radar in one lab called LRD and the industries together. So we are able to make long range radars, high precision radars, which can track multiple targets from very farther ranges. And after that, we can have a very high precision tracking, detection, identification. And apart from radar, we use certain other means like electro-optics, infrared imagery, and various other physics to identify such targets. Once we identify such targets, we need to define its identification of a friend or foe, We have got built-in artificial intelligence, our knowledge base, our hardcore software, which our engineers have developed, scientists have designed, that we are able to classify and identify this as an attack target. Not only that, we can further predict its velocity, its point of impact, and future course of action, based on which we have got the counter-attack mechanism. The counter-attack could be for a long-range missiles, which we have designed a number of them, or intermediate-range missiles based on the attack location, or it could be the electronic warfare systems wherein we do the soft killing by high-powered microwave and jamming of the signals, that is called soft kill. And finally, if it comes closer by for any reasons, or if it is just short targets, then we have got the laser level directed energy weapon to counter-attack with a pinpoint attack and firing. So this is the various layered defense attacks which we have got, and of course the final level is always our attacks and the guns. So with this all multi-layer of attack, we can detect, we can identify, we can classify, we can define it, either it is an attack or a friendly, based on which the neutralize. So all these technologies in various forms by our multiple laboratories of DRDO, they have worked. And the entire industry belt of Indian defense sectors, both PSUs as well as private sectors, are fully geared up. They have taken our TOTs to realize such systems.
Yes.
And in totality, in various bits and pieces, the models have been developed, integrated, and in various forms it has been deployed. And today, lots and lots of research is going on in this particular field, how to have very high strength algorithms, high cognition algorithms, more signal processing, intensive evaluations, and more powerful radar and missiles for precision attack.
Dr. Das, give us a sense of how much of this is indigenous, developed by Indian scientists, how much of this is contributing by the private sector, and how much of it is something that we depend on our trading partners on or with?
Okay, let me tell you. Generally, this entire concept is 100% Indian concept. We have all thought, we have all planned, and we have executed. The design of the entire system is Indian. The entire algorithm, the development, the basic hardware design, the implementations, the entire thing is done by DRDO. But however, when we do the design, we take it up to prototyping level. We test it in the lab, we test it in the field. And through the industries, Indian industries I'm specifically saying, which comes through our general process of competition. And they realize in multiple numbers such systems through their systems and our design and all the protocols and every system design being Indian, we make the systems out. But having said that, there are certain core level dependencies will always be there. I think every country needs that. We cannot have indigenizations to the grassroots level to that extent. Let us say if you talk about basic processors or FPGA, if you talk about certain chips, certain SRUs, some basic blocks are always maybe certain detectors. Some few things are there which definitely comes out. But mostly end to end the system is designed, developed and designed and delivered by the Indian industries through Indian brain, through DRDO.
Thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow.
I'm tired of doing interviews in the boardroom, Babish.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are
Hi, we're talking about Your Money Matters on NDTV Profit, and I'm Alex Matthew. Now, over the course of this conversation, we'll talk about mutual funds and specifically mid-cap and small-cap schemes. The reason I'm talking about this is there continues to be a lot of interest in investing in these schemes, and I'm talking about the latest data. In the month of July itself, you had the Association of Mutual Funds in India, which is the industry body, that sent out data and said that on a net basis, 11,000 crore or thereabouts has gone in to both of these categories, and roughly it was an even split. So that should tell you that investors continue to pile into small caps in particular, actively managed, and also mid caps. So the question is, have the largest of these schemes done incredibly well? And it's possible that you have them in your portfolios. And what should your strategy be? Will you continue to see the kind of gains that you've seen over the last 5 years? And what is the kind of fluctuation that you can expect? Just this year, at the start, you saw a 20% drop in the broader markets, and that recovered completely over the course of the next couple of months. But I'm joined today by Rishabh Desai, who's the founder of Rupee with Rishabh Investment Services. Rishabh, thanks so much for taking the time. Let me ask you, in your experience right now, are people continuing to gravitate towards small and mid-cap schemes?
Hi, Alex. First of all, thanks so much for having me on the show. I think you put the context to very well. Absolutely. Over the past 3 to 5 years, we have seen some exceptional returns in the mid and small cap space. I mean, we have actually seen returns in the range of 25 to 30% CAGR, right? Which is really exceptional. And we don't get to see these kind of returns every next 3 to 5 years. I mean, on a rolling basis, 25 to 30% CAGR is something really very rare. And, due to strong liquidity and very good earnings, we really saw mid and small caps doing phenomenally well. Now, it does not guarantee, and it's not necessary that the next 3 to 5 years would be the same. I mean, there is a possibility. We cannot ignore that. Of course, if there is good amount of liquidity and earnings are very strong in the next 3 to 5 years, probably we can see something similar returns. But it's very unlikely or very, very doubtful that these kind of returns replicate in the next 3 to 5 years, Alex.
Okay, that's an important point to make. But I was curious about what the top 3 schemes, and very hard to really draw up a comparison. So I've simply asked you to look at the top 3 schemes based on assets under management. And these will be very large schemes. So let's talk about one category and then the next. Since small caps is what everybody is interested in, let's start with that. What are the top 3 schemes based on assets under management, and how have they done?
Alex, as on today, the top 3 schemes in small caps by AUM are Nippon India Small Cap, which stands at around 66,000 crores as we speak. Second in line is HDFC Small Cap, which is at around 36,000 crores. And SBI Small Cap Fund is the third largest scheme by AUM, which is at around 35,000 crores. Now, these are really giant AUM schemes in terms of, especially in the small cap space. Usually what we recommend our clients to do is, to pick small cap schemes which are of low to moderate AUM, right? In order for them to churn much more efficiently, in order for them to generate alpha on a consistent basis. Now, if I pull out the returns of these 3 particular schemes, I mean, they have definitely given superior double-digit risk-adjusted returns, Alex. I mean, on a 3-year basis, I mean, these schemes have delivered anywhere between 15 to 20%. CAGR returns, and on a 5-year basis, these funds have delivered anywhere between 25 to 30% CAGR returns, right? Now, again, the benchmark itself, the small cap benchmark itself has delivered greater than 20% CAGR returns in both of the pockets, which is the 3-year pocket and the 5-year CAGR pocket. Okay. Now, all of these three funds have been more or less benchmark again. The performance and the returns have been more or less benchmark again on a 3-year basis, because on a 3-year basis, the AUM has grown substantially, Alex. It's actually more than doubled. Okay, and on a 5-year basis, these three funds have given actually slightly higher returns than the benchmark, but definitely on a 3-year returns basis, these funds have delivered more or less kind of benchmark hugging returns, mainly due to the high AUM.
I'll circle back to what you were saying about, telling your clients to invest in low to moderate sized schemes in this small cap category. But first, let's also discuss the mid cap category, where the largest scheme is even larger than the Nippon Small Cap Fund. Has got 84,000 odd crore of assets under management. Let's run through the top three.
Alex, the top three funds, mid-cap funds by AUM are HDFC Mid-Cap Fund. Second in line is Kotak Mid-Cap Fund, and third in line is Nippon India Growth Fund. Now, HDFC stands, as you correctly said, around 84,000 odd crore. Kotak Mid-Cap stands at around 57,000 odd crores. And Nippon India Growth Mid-Cap Fund stands at around 38,000 crores. So again, these are again very, very giant AUM funds. Again, all of these three funds have delivered superior double-digit returns in the range of 25, 26% on a 3-year basis. And going to the 5-year basis, it's at around close to 29, 30% CAGR. Again, the same thing has happened even in the mid-cap space, is that on a 3-year basis, the AUM has grown substantially, practically more than doubled. So you would see the 3-year returns have been more or less benchmarking and some pockets of underperformance. But on a 5-year basis, the funds have definitely outperformed. But due to the large AUM, the funds have some funds have underperformed and some funds are given benchmarking returns on a 3-year basis, Alex.
Yeah, and the kind of AUM growth, as you've already pointed out, has been absolutely stellar. This is because the market as a whole has also risen quite substantially over the course of the last 5 years, but also the influx of funds that has come through. And this is data that you've sent me, so I'm just going to quickly tell our viewers about it. Nippon India Small Cap grown from 20,000 crore in July 2022 to 65,000 crore rupees in July 2025. That's absolutely phenomenal. HDFC Mid Cap as well, seeing that kind of a growth, 32,000 crore rupees in that month of July 2022 to 83,000 crore rupees. But I want to delve a little deeper, Rushabh, into why you are saying that for the small cap category, you should have a small to a moderate kind of an assets under management. How would you define that? And why is it difficult for schemes to generate alpha? And I do want to have a caveat there, Rushabh, because you have Nippon India Small Cap that is consistently stayed in the upper echelons of the category.
Alexi, first of all, there are many companies in the mid and small cap space which are illiquid. Okay, in the mid and small cap space, there are a lot of companies which have heavy promoter holdings. Okay, so the free float is fairly narrow especially in the small cap space. I mean, of course, the market capitalization has grown. Promoters have also diluted till some extent, but still overall, because you see the tail being so long, especially in the Nippon in the fund, which you would see the Nippon Small Cap Fund has actually more than 200 stocks as we speak. Okay, which clearly shows that the free float is still very narrow. There are many stocks which are still illiquid. Now, when you have a larger and a giant AUM, right, the churn becomes very difficult, because say like if the fund manager wants to buy say like a 10% stake, right, a 5 to 10% stake, it's going to be huge in that particular category, especially in the small cap category. Fund managers may not find that that much amount of stake in that particular small cap or mid cap company, right? So that is the reason why you see the tail of these funds going to like 100 stocks, 200 stocks, and even more. So I feel a lower AUM will help the fund manager churn much more better. This is number one. Find ample of liquidity. Right, and when you are able to churn and find ample of liquidity in the market, you are able to generate alpha automatically. Because see, let's not forget, gone are the days where the buy and hold strategy works. See, today we are living in a very dynamic world, and markets are dynamically changing over the next over 3-6 months or so. So the market cycles have also shortened. So I think more dynamic management and churning the portfolio will help fund managers generate more alpha and consistent alpha generation over the period of time.
Yeah, you referred to the number of stocks, but I do want to ask you to take us through the list as well, because there are 6 schemes essentially we're talking about, and most of them have seen a pretty substantial increase in the number of stocks that they hold. Of course, the most crazy, I'm running out of adjectives to talk about this, because 147 stocks is what they had, Nippon Small Cap, in July of 2022, and they currently have 238. So effectively they've added 90 stocks, so there are about 91 stocks in that time frame, which is what maybe some of their competitors have as a whole. Rishabh, what does that tell you?
It's like as well as buying an index, Alex. Very simple as it goes, So I feel, see, I'm not discouraging clients to invest in any of these schemes. Again, these schemes are very high quality schemes managed by super experienced and quality fund managers backed by a very experienced research team. So there is no doubt in it that the management of all of these schemes is absolutely great. But again, I don't know going ahead how will these schemes be able to generate alpha, Alex, over and above of the benchmark. See, when you're investing in an active mutual fund, you're paying an additional amount of fee to the fund manager and the AMC to give you returns over and above of the index. Right now, if the fund is not able to give you returns over and above the index, then there is no point being in the active participation. Might as well I just buy a nifty small cap 250 index and just sit tight, right? Yeah. So I feel like going ahead, I would still bet on funds which are have strong track records, have strong philosophy, but have low to moderate AUM, so that the probability of generating higher alpha is much more higher compared to these high AUM funds.
Important points that you make. And by the way, it should be mentioned that Nippon India Small Cap Fund, contrary to a lot of people what they're saying, has managed to rank among the top last year and continues to do well. Of course, they have stopped inflows through lump sums. They allow through SIPs consistently, and they've taken that call based on their assets under management. But I want to come to the most important point, which is what you were suggesting, right, Rishabh? It is generally found that in small cap schemes, the portfolio duplication is not very high because of the wider ambit or the wider landscape of stocks to choose from. So is it a good idea to have more than one small cap fund just to ensure that you are covered and you have a higher chance of success?
Alex, you correctly pointed out that there is a wider choosing of stocks in the small cap space. There are close to 4,500 stocks in the small and micro cap space. So this is what I would suggest. See, when you're creating a portfolio now, just keep one mid cap and one small cap fund. I wouldn't encourage someone to go beyond one. Now, when you are creating a portfolio, it should be a combination of, say, flexi cap funds, multi cap funds, and then mid cap and small caps. I wouldn't encourage a client to go purely in the mid and small cap space due to the high cyclical and volatile nature of these products. So even in the flexi cap and multi cap, the funds are by default going to take some allocation, some exposure into mid and small caps. So having say 50-60% allocation towards flexi cap strategies, 20-25% into one mid cap fund and 20-25% in one small cap fund, I think that should do the job.
Very, very quick last question. In the recent past, I must tell you, Rishabh, that we've had conversations with advisors that have said maybe in the mid-cap category, because it's increasingly getting difficult to beat the benchmark, even a passive approach can be taken. But do you want to tell us about schemes that are in your shortlist that you are currently telling your clients to consider in the small cap and the mid-cap category?
Absolutely, Alex. I mean, see, in the mid-cap space, I like Edelweiss mid-cap fund. And I also like the Edelweiss mid-cap momentum fund, which is a smart beta index fund. Okay, so I think these are the two funds what I really like. In the small cap space, I like Tata small cap fund, and also the Mirai asset quality momentum small cap fund is something what I really like as well. So I think today is a time where active participation and smart beta participation would really balance out one portfolio going ahead in terms of alpha generation.
I just want to confirm one thing. I know that Tata Small Cap Fund did pause lump sum investments. Is that still the case in your knowledge?
I am not too sure.
We'll have to check that. We'll have to check that. But they did, and they were allowing for SIPs to go through. Rishabh, thanks so much for joining in for this lovely conversation, and look forward to the next one.
Thank you so much, Alex.
All right. Now, I was driving to my hometown over the long weekend, and I happened to be driving on the 15th of August, and I saw on the expressway between Mumbai and Pune that there were a lot of cars stalled on the side of the road. It turns out that because of the kind of traffic that took place, a lot of cars broke down. It's possible that their clutch plates got affected because of the climb in the ghats, but there could be other reasons as well. And of course, over the last couple of days in Mumbai, you've seen inundation, and that is maybe a little bit of an understatement. And a lot of people are complaining of engine issues. How should you react to this, and does your motor insurance cover this? Who better to answer than Animesh Das, who is the Chief Executive Officer of ACCO. Animesh, thanks so much for taking the time, and pleasure speaking with you once again. Are you seeing increasing number of cases of breakdowns because of traffic-related issues on the ghats, and also engine-related issues because of the rains?
Yeah, we do. Every year around in monsoon, there are multiple reasons. One is obviously what you mentioned, where there are accidents or maybe maintenance related issues, specifically in ghats, specifically in hilly areas and different scenarios, but also because of the visibility issue during monsoon, right? So there's a higher chance of people ending up meeting an accident just because the visibility is low, right? So we also see that the industry also observes that claims around in the monsoon areas are higher.
Okay. All right. So the next question is then, Animesh, what is covered and what is not in this entire situation? Because on the one hand you have, and here I'm specifically talking about maybe a clutch plate issue, because you're in bumper to bumper traffic and there is an incline and you're trying to keep the car running, and you've burnt your clutch plate. Is that covered by motor insurance? And is insurance something that covers engine damage in a rain situation also?
So two different scenarios. I'll first define the basic fundamental of it, right? What insurance covers is majorly accident or any kind of external impact, right? What it doesn't cover, or what doesn't come under the external impact or accident, is maintenance, wear and tear, which happens with time, right? So when we think about clutch plate as a scenario, it's a wear and tear. It happens with time. As you keep using your car more and more, with time your clutch plate obviously will wear out, and if it breaks or if any damage to it happens, is majorly a maintenance issue. It's not an insurance accident or impact issue, right? So that's why any part, not just clutch plate for that matter, any part which wears out with time is not covered under insurance, right? So just wanted to clarify, this is important. Insurance covers something which is unpredictable, something which may happen, but wear and tear is something which all of us know, as at least car owners or vehicle owners, that will happen eventually, right? So that is not covered under standard insurance policy. On the other side, engine is a very specific case. So there are two. I'll try and clarify this in a as simplified manner. So in case of engine, there can be a flooding situation. So if there's a flood impact on the car and the car gets damaged because of the impact, or the engine gets damaged because of the impact, that is covered in standard insurance also. So if you're a car owner and your engine gets damaged because of the impact of the flood, right, and it's get damaged, physically damaged, then it's covered under the insurance by default, under the standard insurance policy. But there are 2-3 scenarios of engine which directly doesn't qualify as a part of the impact. Like for example, the water gets inside the engine, maybe because of a flooding situation, maybe because of whatever reasons the water can get in a waterlogged area also, water can get into the engine. And then the engine stops working. This is usually not an impact. And this is a gray area. For me personally as a car owner also, this is something which I also get confused with, that why this is an external impact and an external reason of my engine getting damaged or failing. They should be covered under insurance, right? But most of the time, this is not covered under the standard policy. So there is an add-on called Engine Protect, which covers this specific scenario. So if your engine gets damaged or failed because of water ingression, water getting into the engine without any impact, without any external major damage as such, but it's an internal damage because of the water ingression. So Engine Protect add-on covers it. I'll highly recommend everyone, whoever is the car owner, specifically in Mumbai or Chennai or any other region where we see flooding very frequently, or you stay in a place where there's a possibility of waterlogging, you should buy this Engine Protect add-on over and above your standard policy. That will be very, very helpful. I hope I was able to clarify.
No, you were able to clarify, but a couple of more points also from the insurer's perspective. And I've had this conversation in the past, but I think it bears repeating, Animesh. In a situation where you are driving in a flooded zone and your car cuts off, then cranking the engine is something that creates problems. I've heard that insurers refuse to cover such situations. So what is the best practice if you find yourself in an inundated area or if you're driving in a flooded zone?
See, the first thing is avoid driving in a flooding zone. That's the basic thing, right? Which most of us try and avoid anyways. The second is, if you got stuck in any waterlogged area, avoid using your own car. Avoid using the car through that area altogether. If you are bound to do it for whatever reason, and if you get stuck in there and your car stops or the engine stops, then you should not try and crank it again, right? So that is a scenario where the water can get into the engine and then the engine can completely seize, right? So the second suggestion is avoid that. You should not get stuck in a waterlogged area and then try to ignite your engine again. That should be avoided. In this situation, typically there are 2 things which I'll recommend. One is take care of your own and your family's safety first, right? So avoid using the car, get out of the car, get into a safe place. And then the second step is call up your insurance company. Most of the insurance companies, either by default as a part of their coverage or with some paid services, maybe they'll charge you, but they can send across a towing truck, they can send across some kind of roadside assistance help where they can take the car out of the waterlogged area without cranking up the engine, without driving the engine or driving the car. That is the safest way of getting your car out of a waterlogged area, but don't try to use your car in this scenario, right? So this is like a typical measure you should take as a car owner. But I know there are scenarios where we feel that I'm going to get stuck. Let's give it a try. Let's crank up the engine. Let's try to get out of that waterlogged area. It's a very tricky situation. But my recommendation, like I said, call up the insurance company, get the car towed, take it to the safest place first, and take care of your family first before even figuring out about the car.
Very important message that you're sending out, Animesh. Now, we're speaking at a time when on social media, and I started with the conversation about the ghats on the way to Pune, and a lot of cars breaking down. On social media, people are saying that this has to do with the fuel that is being used and whether that is having a bearing on the engine. And this is a debate that is not new. It's been happening for some time. But from your perspective as an insurer, have you looked into this? What is the kind of approach that you have on the implications for an engine for a higher use of ethanol?
So as of now, from our technical evaluation point of view also, and obviously we refer what is the information available in the market and what government is also communicating out here, we haven't seen any damage or any kind of failure issues with respect to engine as far as ethanol, high ethanol petrol is used, right? So we haven't seen it yet. So it's tough to kind of comment on what's going to happen. It's a hypothetical situation right now. On the other side, I wanted to reassure the consumers that if there's any accident or impact related damage to your car, we as ACO and generally most of the insurance company will actually cover those claims for sure, independent of whichever fuel you are using, right? So if there's any damage to your car, and obviously you have the right insurance for that, if you have standard insurance policy, it will cover your damage or impact or any accidental damage for that matter on your car, independent of fuel, right? So that is one important thing to be clear on. Whether there'll be a damage because of fuel and all is something which has to be established, right? So it's not out there yet. So it's too early to comment on that.
And it goes back, Animesh, I think to what you were describing on wear and tear and that kind of damage, right? So if there is indeed a technical reason for engines to get affected as they stand right now, maybe that doesn't fall under the purview of insurance in the first place. Is that a fair assessment at this point?
Yeah, so rightly said, Alex. I think, like you said, right? So any failure of the engine because of any wear and tear, any maintenance related issues are anyways not part of the insurance, right? So it will not come under the purview of the insurance itself. So yeah, that's how it is.
Got it. Animesh, absolute pleasure speaking with you, and thanks so much for being so candid with us. Pleasure having you.
Thank you, Alex. Thanks for having me here.
All right, that brings us to the end of this edition of Your Money Matters. Let us know what you think and let us know what you'd like us to talk about. Do stay tuned. This is NDTV Profit.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Babish.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Oh, wow. Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, benchmark indices ascended through the day to end near their intraday highs. The Nifty and the Sensex ended with gains of about 0.3% each, while the Nifty settled above 25,000. The 30-pack Sensex concluded trade above 81,000 levels. IT heavyweights such as Infosys and TCS uplifted the index. On the other hand, Reliance, Bajaj Finance and ICICI Bank added pressure. Apart from the two IT players, FMCG counters like Nestle and HUL also emerged as the top gainers. Nifty Midcap 150 outperformed the frontline indices. The sectoral picture at close appeared mixed with half the sectors in the red and half in the green. So the top sectoral gainers of the day were Nifty IT, FMCG and Realty, while Nifty Defence, Media and Pharma emerged as the top losers. However, the advanced decline ratio ended skewed in favour of the bulls. The Indian government plans to regulate online gaming targeting harmful real money games. A new authority will promote social and esports sectors while discouraging 1/3 of the industry. The Finance Ministry prioritized social issues over GST losses. Victims of money games won't face punishment under the new bill. Gaming federations AIGF, EGF and FIFS have urged Home Minister Amit Shah to reconsider draft bill banning real money skill games. They warned the ban could destroy over 2 lakh jobs and shut 400 companies. The industry, valued at over 2 lakh crore rupees, seeks progressive regulation. A meeting has been requested to propose solutions. According to Ashwini Vaishnav, the online gaming bill aims to establish a structured mechanism for policy formulation in the online gaming sector. This comes as online gaming has been linked to serious social, economic and psychological consequences in India. The bill also highlights concerns over aggressive promotional campaigns and opaque algorithms. It further also addresses links of online gaming platforms to illegal activities like money laundering and terrorism. Nazara Tech has clarified that it has no direct exposure to real money gaming businesses. However, it does have an indirect exposure through its 46.07% stake in PokerBaazi. The company has stated that PokerBaazi's revenue is not consolidated in its financial statements and has no impact on its reported revenue or the EBITDA. In fact, PokerBaazi's contribution to Nazara Tech's profit after tax was negative in Q1 of FY26. Nazara Tech had invested 805 crore rupees in PokerBaazi through a combination of cash and stock. So the company does not anticipate any material adverse impact on its operating financial performance. G&G Electronics posts strong revenue and profit growth in the first quarter.
The company reports a 22% year-on-year increase in consolidated revenue to 312 crore rupees. EBITDA rises 26% to 32 crore rupees, with margins improving slightly by 32 basis points to 10%. Net profit also surges 52% to 18 crore rupees. This is boosted by reduction in the deferred tax, which helps deliver a top-line beat. Aditya Infotech delivers a strong first quarterly result post-listing. The company reports healthy bottom-line growth driven by impressive margin expansion. In Q1, consolidated revenue rises 16% year-on-year to 740 crore rupees. EBITDA also surges nearly 50% to 70 crore rupees, with margins expanding by 183 basis points to 8%. So net profit sees substantial growth as well, increasing 46% to 32 crore rupees. Jamna Auto Industries caters to all OEMs, the replacement market and the export market. The company manufactures conventional parabolic leaf springs, air suspensions and lift axles. Now, in Q1, Jamna Auto Industries reports revenue growth of 3% to 573 crore rupees, with EBITDA rising 2% to 76 crore rupees, maintaining margins at 13%. Net profit also stands at 46 crore rupees, which is up 1%. The revenue mix shows 53% from existing products and 47% from the new ones. Market-wise, 75% of revenue is from the existing markets, while 25% comes from new markets. Looking ahead, Jamna Auto targets an equal split in FY 26 to 27, aiming for 50% of the revenue from the new markets and 50%. Shares of Dynamic Cables surged 20%. The company has secured BIS licenses to make high conductivity aluminium alloy stranded conductors and thermosetting insulated armored fire survival cables. Now, these approvals are valid until August next year. Production capacity has also risen after recent upgrades. The firm can now handle a monthly turnover of up to 135 crore rupees, which is up from 100 crore rupees earlier. The National Company Law Tribunal has deferred Vedanta's demerger case hearing to September 17, 2025. Now, approved by Vedanta's board on September 29, 2023, the demerger will split the company into 5 listed entities: Vedanta Aluminium, Vedanta Oil and Gas, Vedanta Power, Vedanta Steel and Ferrous Materials, and Vedanta Limited. Shareholders will receive 1 share of each new company for every Vedanta share held. Nuvama Wealth Management maintains its buy rating on Vedanta despite recent stock price dips. The brokerage sees no major impact from ongoing hearings on Talwandi Sabo demerger or the rejection of a $200 million petition. Vedanta's share fell 2.11% today. In fact, during intraday, it fell nearly 3%, but Nuvama believes that market overreacted. A board meeting tomorrow may announce a dividend of 10 rupee per share. With strong aluminium and zinc growth, Nuvama's target price remains 663 rupees. Aurobindo Pharma is nearing a $5.5 billion buyout of Zentiva, a Prague-based drug maker, to boost its European presence. Zentiva's 23% margins and diverse portfolio outshine Aurobindo's current financials. The deal, funded largely by debt, may strain Aurobindo's finances. Past acquisition failures and potential management challenges raise the concerns. Hindustan Aeronautics gained 3% in early trade as the cabinet approved 62,000 crore rupee of order for 97 LCA Mark 1A aircraft. Now, the stock price subsequently, paired its gains. This order will boost HAL's order book to 1.89 lakh crore rupees. HAL's pipeline includes 1.5 lakh crore rupees in projects like Sukhoi upgrades and ALH supplies. The company plans 14,000 to 15,000 crore rupees in capex over 5 years. Revenue is set to grow 8 to 10% in FY 26, with EBITDA margins at 38 to 39%. UBS maintains a neutral rating on HAL with a target price of 4,900 rupees. The government approved 62,000 crore rupee of order for 97 Tejas Mk1A aircraft. HAL's order book now includes 180 Mk1A jets with deliveries yet to start. UBS expects 6 Mk1A deliveries in FY26 after resolving engine issues. Citi has slashed target prices for major IT firms due to a tough growth outlook. Valuation multiples were cut after recent sector derating. TCS, Wipro and others face sell ratings with reduced targets. Hexaware remains a buy while Infosys and HCL Tech holds neutral ratings. Citi maintains a sell rating on SRF with the target price of 2,725 rupees, citing its new multi-year deal with Chemours. Now, SRF's PTFE facility, commissioned in October 2023, will support this partnership. DAM Capital also holds a buy rating with 3,521 rupee target, seeing growth potential. The deal strengthens SRF's position in advanced fluoropolymers. Nomura predicts a GST cut could boost auto sector demand by 5 to 10%. Maruti, M&M, Ashok Leyland and TVS have highest upside potential. Small car segments led by Maruti and M&M would benefit most. However, the move could widen the price gap, hurting EV makers. Suven Life Sciences is pinning its hopes on a breakthrough Alzheimer's drug Masuperdine by 2027. Now, the company is targeting a multi-billion-dollar opportunity with this novel treatment, which aims to address agitation and aggression in Alzheimer's patients. Chairman and Managing Director Venkateshwar Lujasti has invested $50 million into this drug discovery, and the company recently raised 857 crore rupees through a preferential issue. While the results of the phase 3 clinical trials are not expected until 2027, Jasti remains hopeful. Regal Resources IPO made a strong debut, listing at 141 rupees on the NSE, which is a 38.24% premium over its 102 issue price. Now, the strong entry thrilled the investors, but early selling pressure halted the momentum. The IPO, oversubscribed 159.88 times, raised 306 crore rupees for maize-based product manufacturing. Now, despite the pause, Regal's robust financials and growth prospects signal long-term potential. Mangal Electrical Industries launches its IPO aiming to raise 400 crore rupees. The price band is set between 533 to 561 rupees per share, with a post-issue market cap of 1,550 crore rupees. Now, the subscription window closes on August 22. Funds will be used to repay the borrowings, expand Unit 4 in Rajasthan, meet the working capital needs, and also support general corporate purposes. So the Jaipur-based company, which is a key player in the transformer manufacturing, is set to list on the BSE and NSE on August 28. Jefferies reports India's economic activity hit a 10-month low of 5.2% in July, but recovery is expected. So rural economy grows with strong crop sowing and currency circulation. Nomura says that GST cuts may boost consumption but not harm the fiscal health much. Bank of America sees autos and consumer durables gaining from potential GST reductions. A two-day meeting of the group of ministers on GST overhaul is set to begin today in Delhi, with Finance Minister Nirmala Sitharaman addressing the gathering. So the meeting will discuss key GST proposals, including Centre's plan to simplify GST rates into two slabs, 5% and 18%, with a special 40% rate for select items. Now, today's agenda includes deliberation on the compensation cess and tax treatment of health and life insurance, and examination of the Centre's proposal to reduce GST on insurance premiums to 5% or nil. Russia's deputy trade representative said that the rupee ruble trade mechanism has been strengthened despite sanctions. Now, Gravita also said that India buys Russian oil at a 5% discount and that India-Russia trade is expected to grow at 10% annually. Russian Charge d'Affaires Roman
Babushkin supported India's stance that Indus water dispute between India and Pakistan is a bilateral issue. Now, Babushkin said that US tariffs were unlikely to impact trade between India and Russia. He added that Russia supports India's jet engine manufacturing ambitions. PG Electroplast has signed a definitive agreement with Pax India to manufacture point-of-sale devices in India. Now, this marks PG Electroplast's entry into the payments and financial technology hardware segment. Now, the company will manufacture Pax-branded POS devices at its existing facilities, with production expected to begin by the end of this year. PG Electroplast's entry into the POS manufacturing space is a strategic move, broadening its portfolio beyond the consumer electronics. A payment dispute has been erupted between DAM Capital and MobiKwik, with IPO vendors threatening legal action against MobiKwik over delayed payments of 42 crore rupees. Now, ad agencies, lawyers and depositories have raised concerns over long pending dues by MobiKwik. According to sources, vendor invoices have not been generated even 8 months after the IPO, resulting in escrow funds remaining unreleased. Furthermore, the depository has allegedly, stopped processing some corporate actions of MobiKwik due to the non-payment of the IPO dues. MobiKwik has approached the Delhi High Court against DAM Capital over unreleased funds from an escrow account. Now, the court is set to hear the case on August 21. Also, DAM Capital is discussing with both MobiKwik and SBI Capital over variable fees payout related to the IPO. MobiKwik listed on the exchanges in December 2024 with DAM Capital and SBI Capital, as lead bankers. China's exports of rare earth magnets to the US have surged to a 6-month high, following a trade deal between the two nations. In July, China shipped 619 tons of rare earth permanent magnets to the US, a 76% increase from the previous month. Now, this rebound comes after a low of 46 tons in May. The US Trade Representative noted that China has made partial progress in normalizing flows. Now, this comes after talks between both the countries in Geneva and London this summer. Air Canada is back in the skies after a pay deal with its flight attendants union. The strike, which grounded flights since Saturday, affected over 5 lakh passengers. The tentative agreement reached Tuesday offers 8 to 12% of pay hikes and ground pay for crew. The union hailed it as a historic win. Flights are resuming, but full service may take days. So the deal awaits ratification by over 10,000 staff. Walmart has pulled shrimp from shelves in 13 US states after the FDA flagged possible radioactive contamination. A shipment of frozen shrimp under Walmart's Great Value label tested positive for cesium-137, a dangerous isotope. While the tainted batch didn't reach stores, customers are urged to toss recently bought shrimp matching the recall description. Walmart is offering full refunds and working with the supplier to investigate. The affected products were sold in states including Florida, Texas, and Georgia. Shoppers are advised to check their purchases and stay cautious. Delhi Chief Minister Rekha Gupta was attacked today during a public hearing at her civil lines residence. Now, the assailant, identified as 41-year-old Rajesh Sakriya from Gujarat, allegedly assaulted the CM over a stray dog ruling. Security detained the suspect and police are investigating the matter. Prime Minister Narendra Modi met with Chinese Foreign Minister Wang Yi at the Prime Minister's office in Delhi today. PM Modi conveyed his greetings to President Xi Jinping and Premier Li Qiang, expressing his anticipation for attending the SCO Tianjin summit in China. PM Modi also assured India's full support for China's work as the rotating chair of the SCO, ensuring that the summit's success. He noted the long history of friendly exchanges between the two ancient civilizations as well. The White House officially launched its TikTok account on August 19, 2025, leveraging the platform's large US user base of over 150 million to spread President Donald Trump's messages. The debut video featured Trump declaring, "I am your voice," signaling a renewed focus on reaching younger audiences. Now, this move follows Trump's earlier embrace of TikTok during his 2024 campaign, despite previously calling for its ban over security concerns related to Chinese ownership. The launch comes amid ongoing congressional pressure demanding TikTok sale or ban by September 17, with the Trump administration granting multiple deadline extensions. The Kremlin has played down talk of an imminent summit between Russian President Vladimir Putin and Ukraine's Volodymyr Zelensky, as Donald Trump renewed his call for the two leaders to meet to discuss the ending of the war in Ukraine. The push for a bilateral meeting comes after the US president met Putin in Alaska last week and welcomed 7 European leaders and Zelensky to the White House earlier this week. Chinese refiners have significantly increased their purchases of Russian crude oil, capitalizing on discounted cargoes as India's imports decline following new US tariffs. China's imports of Urals crude from Russia's Baltic and Black Sea ports nearly doubled the year-to-date average, with shipments backed by high refinery operating rates. Meanwhile, Indian imports have dropped sharply due to a 50% US tariff aimed at curbing its Russian oil demand. China benefits from a trade truce with the US, avoiding similar penalties. Now, this shift in global flows highlights China's growing role in taking excess Russian barrels amid geopolitical tensions. Liverpool's Mohamed Salah has made history, winning the PFA Player of the Year award for a record third time. Now, the 33-year-old Egyptian star, who scored 29 goals and provided 18 assists during the 2024-25 season. During the same season, Liverpool did win the Premier League. Manika Vishwakarma from Rajasthan has been crowned Miss Universe India 2025. The 22-year-old political science student and founder of NeuroNova impressed judges with her defense of women's education answer. She'll represent India at the 74th Miss Universe pageant in Thailand this November, aiming to follow the footsteps of Sushmita Sen and Lara Datta. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Babish.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Yeah.
The market.
The online gaming bill that has been tabled in Parliament is S. Krishnan, the MeitY Secretary. Mr. Krishnan, thank you so much for speaking to us on, I think, what has been the biggest issue, and has the industry also saying that maybe this is a death knell for a 2 lakh crore business. But can you start by explaining the thinking behind this bill and what the intent is?
Thank you for having me on your show. The intent behind this bill is that the government believes that there is a large segment of gaming development gamers, and there's an entire ecosystem there, which can potentially make India the game development capital of the world. And a number of measures have been taken to actually support that. The National Institute of Creative Technology is coming up in Mumbai. STPI, which functions under MeitY, has centers of excellence both in Hyderabad as part of T-Hub and also in the Northeast. And we are working through a number of other ways by which gaming-related development is being focused on. One of the issues which has repeatedly come up in the gaming sector has been clarity on classification. Many parts of the gaming sector believe that they are tarred by association, and there is a segment of the gaming sector which is causing distress, financial distress, social distress related to addiction and so on. One part of it is doing that, whereas another part is really positively oriented in terms of gamification, development, content development, creative development, and so on. Government's intent is very clear that the portion which relates to the positive outcomes needs to be encouraged and developed. And for that, a clear delineation has to be made between the two parts of the industry. And therefore, there's a clear definition which has been offered in this act of within online gaming, of esports and online social games, which include both recreational and educational games. So these two on the one side have been taken up for special attention, for development and further promotion. And on the other side are the online money games, which involve a number of other games which are proving to be addictive and problematic. This is a concern which has been raised in multiple parliamentary committees by people from across the political spectrum. The ministry has also been receiving a lot of these issues as elements of concern. And within the government, there's been considerable concern in this area. And many people who offer even other forms of games have actually represented to government saying that this clarity needs to be given, and there needs to be a mechanism by which the online social gaming industry, the online esports industry needs to be supported and developed. Sure. So that is the primary focus. May
I ask, sir? So, a couple of things have happened. Of course, this classification is important. Although the classification between skill and luck now has been extinguished. It's about money or no money, online money gaming and other categories.
You see, the point here is that between skill and luck, because I think this slight gray area in the law has been used by a number of the proponents and platforms of this game to actually argue what suits them in different jurisdictions. There are no games of pure chance. Pure chance would mean that it is equivalent to a coin toss. And in a coin toss, the outcome should be 50-50. 50% of the time you win, 50% of the time you lose. That kind of thing doesn't actually come out in real life in any of these games. It's a combination of skill and luck, skill and chance. Both of them are there. They're not pure chance in all cases. There is a combination of skill and chance. And that is being used as to saying that state governments cannot legislate in this area because state governments are empowered only to regulate betting and gambling, which is an item under the state list.
Thank you so much, Mr. S. Krishnan, for speaking with us, the MeitY Secretary there, answering all our questions. And this is really the big one. It's well thought out. Now, it might go through its various processes, may go to a select committee, maybe challenged in court, and those processes will continue. But in terms of the government intent, it's very, very clear that this is not something that they want to encourage. And this is specific to online money gaming, not every game that you play online.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandnani, and today we're going to be discussing an IPO. Vikram Solar is what we're going to discuss on KYC today. Let me start off with what I want to know, as we always do. This is, of course, an EPC and a solar module manufacturer. And what I want to know is how realizations are trending. There has been pressure over the last couple of years when it comes to realization. FY24 realizations have fallen by nearly half. And FY25, we've seen a flattish kind of a move on realizations, and which is creating some bit of pressure where margins is concerned. So therefore, I'd want to understand whether this is where realizations can sustain. Mind you, the other piece is also there's going to be oversupply in the domestic market, and that's point number 6 for me. But and I'll come maybe to that. Let me start with the second piece now. There's been some shares which have been pledged, and post IPO, I'd want to know whether there would be any change to this. And by some shares, I mean